hop out the car, leave the motor running. Why you
Welcome everyone. We're gonna get the show on the road pretty quickly here. We're just gonna wait for a few more people to trickle in here. There's our buzzer going off. Let's just give it another few minutes here just to get people round up into the group. If you don't mind, in the meantime, drop in the chat where you're from. Let's get our fingers warm. We really want to make this interactive as possible. So drop in the chat where you're listening from. Matt's here backstage. He's ready to come in with some knowledge. He's going to share some information on some stocks, how to use options to make quick, profitable trades. Matt's inner circle chat room has been fire the last month or so, and he's been dropping some really great options trades where you make really great returns in a matter of days. So he's going to share how he does that. This chat is fast today on the Zoom. So if you register for this webinar, you'll be in the Zoom. The Zoom chat gets priority as always. We got Ecuador, we got Mississippi, Florida, Houston, Texas. We got Ohio, South Africa, Croatia, Texas, Germany. Got the whole world here listening in. About to learn some options trading, stock trading from Matt. We'll give it another 2 minutes or so. Matt, you have a presentation. If you want to start sharing your screen, I'll stop sharing and you can get your presentation set up. And then in a couple more minutes, once the numbers are a bit higher, we'll get started. So I think we're ready to get started here. Matt, do you want to take yourself off mute and slowly get into things, introduce yourself, who you are if they don't know already. And I'm going to turn this music off here in about 10 seconds. And
Can you hear me okay?
Yep.
Okay, now, can you see the presentation? Question is.
Let me take a look. Everyone, let Matt know in the chat if you can see his screen, his presentation there. Same with the folks on YouTube. If you can see the screen, then just drop a 1 in the chat, and then that gives Matt the go-ahead to get ready. We're getting a whole bunch of yeses here.
Good, great.
Perfect, Matt. So let's get into it. So this presentation, we're going to talk a little bit about how you use stock trading, and ultimately options to find quick, profitable trades that you share in your inner circle. So everyone, I'm going to let Matt take the floor, and I'm going to stop talking.
Great, thanks, Harvey. And thanks all for joining us this afternoon. I mean, middle of the week of which is getting towards the middle of an unbelievable month in the marketplace. And I think it's going to continue to be an unbelievably active one, and one where we can make a lot of profits, both on an intermediate term basis, but especially on a short term basis. When you get this pickup in volatility, that's where you can really make the money, some real nice money in the options, and make it rather quickly. But the whole idea is so many people try to guess so many times when it comes to options that I think what I'm trying to do is provide a way for people to get some good picks on where they can make some money rather quickly. But that's just number one. But number two, tell them how I came up with those picks. In other words, to help teach you, educate you on how the trading, how to do that for yourselves, and hopefully with my help as well, in the chat room that we've started just a few months ago here at Benzinga, that's worked out really well. But first of all, I just wanted to go real quick just about my background and why the heck would you even listen to me. But I've been on Wall Street for over 35, closer to 40 years. And I spent the first 25 years of my career in the trading area, the first 25. And, as the previous slide showed, that not only do I do work with Benzinga, but I'm also the chief market strategist at Miller Tabak. Now, before I did that, I was at Solomon Brothers, which was the most important and most powerful trading desk in New York, in the world, for several decades, from the 70s through the end of the 90s. I was there for 15 years in the 80s and 90s. And then did the same thing with Merrill Lynch for 10 years, talking to their institutional customers. And again, I talked to the trading desk of the biggest hedge funds, mutual funds, insurance companies, et cetera, to really learn how, what really makes the market work. And, this is, when we sit there, we talk so much about theoretical issues in the marketplace, and that's good for a very long-term basis. But if you really want to maximize your returns, especially when you want to look at it through in the options market, you really have to look at other areas outside the fundamental analysis. You have to look at other things, especially like technical analysis, to really maximize those returns. And if you've ever heard me speak before, one of the biggest things I ever say is that, so many people on Wall Street say the market is always right. Well, the market's not always right. Was the market right at the top in 2000? Of course not. Was it right at the bottom last March, in March of 2020? Of course not. So that's when you can really make those unbelievably big returns, maximize those returns, and combining those different kinds of areas of research is really where you can go. And now, I had this Benzinga with the stock pick report, where we have several different areas. The tier 1 is really for the very long term. Tier 2 for more intermediate term, 3, 6, 12 months. And then we have a tier 3 where we go into a little bit shorter term and we talk about options in that one. And that's a call that happens 3 times a week. But then we have the chat room, where I'm basically in it all day long, from just before the market opens till just after the market closes. And we talk about different things that are going on in the marketplace. And when there's a lot of volatility, that presents unbelievable opportunities to make some money in the options market. But again, in these chat rooms, and I'll show you how we do it. But we're talking constantly. I had a guy late today say to me, what do you think about Levi right here? I'm thinking about doing a straddle call. Now, for most of what I do is very easy. I'm not into the real complicated option strategies. There's nothing wrong with that, and I engage in them every once in a while. But I'm really, hey, let's buy a put, let's buy a call, sometimes a straddle, which is a way of betting that when you're not sure which way it's going to go, but you know it's going to see a big move, you buy what's called a straddle. And when that would happen with Levi today, because the earnings were coming out to this evening, and we knew, geez, this thing was ripe for a big move one way or the other, because it was sitting right on an important support level. If it was a lousy number and broke below that support level, those puts would do really, really well and more than make up for what you bought in the option, in the call option. That's what a straddle is, when you buy the put and the call of the same stock at the same time, the same price. And what happened was, it was good news. This stock's going to rally, and you're going to more than make up the money. You're going to make more money on the call than you ever spent on the put. And you're going to profit it very, very nicely. But I went through the reasons and the support levels and why I thought this was a really good. It was his idea, actually, but I told him why. I gave him that much more confidence to go ahead and embark on the trade. And I think it's going to work out very nicely for tomorrow, because the stock did report good earnings. It looks like it's going to do real well. But again, we want to go beyond what Main Street, Wall Street says. I hate to say it, but most of those people are paid to be bullish, whether they're a strategist at most firms. Luckily, I work at Miller Tabak. They say, hey, tell us what you think. That's all they really care about. But the other people, it's like they have, in some cases, tens of thousands of retail brokers under their arm. They want you to be bullish. They want you to keep your money in the market. And to the degree, that's the right thing to do, because over the long term, the market does rally. But on a short-term basis, and even on an immediate-term basis, to be able to move in and out of different groups at the right times, you need somebody who's going to really look at beyond the fundamentals. And again, that if a lot of times these mainstream, if you follow what the mainstream is thinking, you follow the herd. I mean, that's what everybody was doing last October, when everybody said, don't touch oil stocks. Fossil fuels are dead. I was pounding the table saying the group was a screaming buy. Nobody owned it. Everybody, the sentiment was against it. The positioning was against it. The fundamentals were against it. It was a great time to buy, and it has been an unbelievable return. The rest of Wall Street didn't get in until the beginning of the year. Now, they're bragging about great returns too, but they're half as much as the ones we made, the ones that we followed here with Miller Tabak and following the Benzinga newsletters. And again, I did the same thing here. It's just a couple of examples that I talk about at key turning points in the marketplace. And the reason why I'm kind of harping on that is I think we're in a key turning point in the broad market right now. But we want to, so I just want to show you how that's worked very well in the past. I just talked about the energy stocks and how that's worked out really well. And actually, there's been a couple of times where I've said, pull back on the group and cut back on your holdings, and then get back into them after the group has come down. I'll actually show you a chart on that in a few minutes. But we also did the same thing in the banks this time last year. I mean, everybody was talking about how interest rates were going to go down. They're going to stay down. The banks were dead money. No, and I had been bearish on the banks. Sorry, I shouldn't say bearish, but I was saying they would underperform. I've been saying that for 2.5 years. This time last year, I started pounding on the table saying, interest rates have turned. The trend in interest rates has turned. This is very bullish for banks, and they've done nothing but outperform ever since. Again, Wall Street, the Main Street Wall Street was very, very late on that. But also we had other situations, individual stocks. And we had here with Viacom this past year, the meme stocks were flying to the moon. And I was looking at Viacom saying, hey, some people were saying, AMC is going to go out of business. You shouldn't be buying it. I was looking at Viacom, and everybody else was saying, oh my God, the stock's had a 285% rally. Well, they're not going out of business. It's a great company. But I said yes. So everybody stayed bullish on that stock. I said no. I said, you've got to get out of the stock. And you sell the stock if you own it. You can buy it back at much lower levels. Sure enough, in less than a week, the stock was 60% lower. More importantly, I said people should, and this was actually on the tier 3 chat. We hadn't gotten into the chat room yet. The 3-tier call, I said, look at the call at the put options in this stock. The put options in the next 2 days, rallied 2,500%, 2,500%. Okay, not 25%, 2,500. And they actually, they kept going. Some people who held on made more than 10,000 times, I'm sorry, 10,000%, not 10,000 times, 10,000% on their money. Now, this is a very extreme case. I wish I could say I came up with ideas like that every single week, but these are the types of things we're trying to work. And the same thing here, again, going against the crowd. Earlier this year, not just a few weeks ago, NVIDIA, one of the best semiconductor stocks, one of the best technology stocks in the business. Everybody likes it. I love it on a long-term fundamental basis, but it had become extremely overbought. It rallied 80% of, just of several months. And I said, this thing's going down. Sure enough, people got it in the chat room who got in. I talked about why the Bollinger Band chart was overbought, the RSI, the Relative Strength Index was overbought. And the stock, people were making 350 to 450% on their put options in just a few days. And this all comes down to, if you want to make that, those things, you want to make educated guesses. You're looking at fundamental factors, macro factors, technical factors. This market, everybody says, technical analysis is just it's a mumbo jumbo voodoo analysis with a bunch of lines drawn on a chart. It's not. Just remember, every fundamental person in the world, somebody who doesn't even look at technicals, will always tell you that the stocks move in front of their fundamentals. The economy moves in front of their fundamentals. They'll all tell you, hey, when a stock's really turning up, when a company's really turning around, its stock will turn up 6 months before the actual things turn around, which makes total sense. You think about it, if a company's been doing poorly for a couple of years and finally their business picks back up, well, they can't have earnings turn around on a dime. They have to reopen factories. They have to rehire people. They have to retrain those people. Those earnings aren't going to turn around right away. But the real money, the real guys, the professional money managers, the hedge funds, the big mutual funds, they have an army of analysts to tell them, hey, things are turning around. Don't wait for 6 months. Don't wait for those earnings to turn around. They're going to turn around right now. And then the stock starts to move because they start buying it. And that gives us, who don't have those army of analysts to rely on, a heads up that the things are turning around. That's why technical analysis is fundamentally based. It's not just a bunch of lines drawn on a chart. Now, again, what we want to talk about today, I'm telling you about what we've done, but most importantly, what I think about what's going to happen going forward. And I'm going to tell you about a few names that I think we can make some money on in the options market over the near term. And then hopefully we'll get a chance to have you guys ask me questions on individuals' charts. I'll have my Bloomberg all set up. We can look at the charts on several of these companies, and I can talk about the fundamentals, the macro situation, and then of course the technicals on these individual stocks to give you an idea of where I think we can make money in the very near future, really over the next week or two, certainly by the end of the month. But I think we are at a key turning point in the market. And number one, on the fundamental side, the stock market is extremely overbought. It's extremely expensive. It's trading at more than 22 times earnings on the 2021 basis, more than 20 times 2022 earnings. This is the second most expensive stock market on record. Now, interest rates are low, and that gives it a certain amount of leeway. But, and of course, evaluation levels are a lousy timing tool. So we don't want to use that solely, but it does make it ripe for a correction. But it's also trading 3 times sales. 3 times, you cannot fudge sales. Price earnings ratios can be fudged because people can play around with their earnings. They can't play around with their sales. Their sales are their sales. Unless they're completely lying and therefore they're going to jail, they can't gain those numbers. We're trading at 3 times sales. That's more than the S&P was trading at the top of 2000. I'm not saying we're going to get a repeat of 2000 or with the crash after the dot-com bubble, but I do think the market is coming in, and there are several reasons for it too, and why I believe the timing is starting to get there. Number one is look at this. Here's the margin chart. Okay, there's too much, margin debt. There's too much leverage in the market. Now again, the high levels of leverage are a lousy timing tool, but when they start to roll over, which they have recently, that's when it comes in. And look what happened here. This is what happened in 2000, record levels of margin debt, and only when it started to turn down. Because what happens when people add leverage, the markets go up more than they should. When they take it away, you get forced selling and they go overshoot to the downside. I'm concerned that we are heading into a situation where we could see that kind of forced selling in the marketplace. Again, the same thing happened here in 2007. And the thing, when we have even way more margin debt now, again, way more leverage in the market. And it's not just in the market, it's in the entire economy with corporate debt at an all-time high. Again, this doesn't mean it's going to happen tomorrow, but we are starting to, but it does mean that we are much higher risk of seeing a deep correction. And, we've kind of been lulled to sleep this year. We finally got a 5% correction last week, but it barely made it to that level. 10% corrections are normal and they're healthy. They're not a big deal. And I think we'll get at least that much going forward here. Now, what else are we facing here too on the fundamental side? the biggest factor, number one factor, we found out that China is de-risking and de-leveraging their economy. You've seen what they've done to Alibaba, to education companies, to their high-tech area. They are trying to slow things down. When the second largest economy in the world tries to slow things down, that impacts the rest of the world eventually. And we're already starting to see that. We're also, so at the same time, they're de-risking and de-leveraging. The ECB, which is the European Central Bank, and the Fed are about to start tapering back. So they're going to be providing less liquidity and less stimulus. And that, this market, again, it's expensive for a reason, because there's been too much liquidity. We had all these emergency measures that lasted well past the time that the emergency in the economy had passed. And then, of course, we have inflation issues. They're not going away because these situation with the supply chain issues. We know this is not going away. All the chip companies, semiconductors, all these different companies are saying this is going to be at least the second half of next year before it changes. And again, we talk about that with inflation really high, that's going to hurt margins. The stock market has had great earnings this year, but now we're looking, they're going to slow down. They're not going to turn down. We're not going to turn into a major recession or bear market, but we are going to see a slowing, and that should provide headwinds. So we really want to be concerned about the market. And here's what we're looking at right now on a technical basis. We have the S&P 500. It is, you see how, people were talking about the 50-day moving average for a long time, and it finally has broken below that. But look at what's doing now. It's now up testing that 100-day. In the past, really the past year, you can see here, September of last year, the 100-day moving average has provided excellent support. It got a little below it back in October of last year, but was able to bounce back. Now we're a little below it, and we're trying to hold that level this time, but we're not bouncing back. See, last year only took a couple of days and we bounced right back. This time around, we're still holding that level. We haven't been able to break out. We haven't broken down, but we haven't broken out. And another reason why I'm so concerned is look at this right here. We have, if it breaks, well, we can't really see it, but the 100-day moving average also is kind of the trend line going back a full year. So if we break below the 4,300 level, on the S&P, that will give it a key lower low, and that's one of the most important aspects of technical analysis. Higher highs and higher lows are always positive. Lower highs and lower lows are negative. This would be the first key lower low if we get below 4,300 we've seen since the March 2020 lows, the pandemic lows. So we give it below the 100-day moving average, a key lower low, and take it below the head and shoulders pattern. I didn't draw the neckline here all the way across, but you can see it starts here and goes across. It would also take it below the neckline of a head and shoulders pattern. This is going to cause a lot of the momentum players to switch from being buyers on dips to sellers on strength. So we are right at the cusp, I think, of on a technical basis of things turning around here. The other reason is that, I don't have the chart here, is that interest rates have changed. Again, they're not as high as they were last March, but they have seen a change in trend. They've broken above trend lines. They've made a higher high. And this is exactly what happened in August and September of last year. And it happened again this year. We saw a change in trend in interest rates to the upside. That caused a correction. People forget we had a correction last year in September. The S&P dropped 10%, NASDAQ dropped 12%. This time around, with even more leverage in the marketplace, I think those dips could be at least that much, and can cause the market to fall further. Not just the market, but individual stocks. And this is, again, what we talk about in the chat all day long. We're constantly trying to give people idea, because what we want to do is when markets are doing well, and we did very, very well on a lot of call options earlier in the year, but we want to be able to not do more than just weather the storm right now. A lot of people say, we'll help you weather the storm and just sit there. You'll lose money for a while, but you'll make it all back eventually. What we want to do is we want to be able to at least break even by making money on some of these down, and keep our long-term positions. That's great, because the markets tend to go higher over time. But make some of those hedges and even make some profits and actually have more money. So when the market does come in and does see a correction, you're going to have plenty of money to buy on weakness and then let things ride on the way back up. So again, like I said, I want to help people weather the storm. We can go. I've talked about this. I combine all these different factors. We can go into the reasons for it, but I don't want to drone on too long, because I want to go into some specific examples here and what we've had. Now, here are the ones we've had.
Just before we hop into the actual examples from trading, I just want to ask a couple of questions from from the YouTube. Just we'll get a few questions in now, and then I promise everyone we'll go through a huge Q&A at the end. Plus, you can give us your tickers. But one of the questions from YouTube, from Dupre, it says, Matt, do you think today is a bullish reversal for S&P and NDX? I think it's just good to keep the conversation with all the viewers interactive as well.
Absolutely. I do not think so. It was a nice bounce back. We've had, it seems like every other day we go up, we go down, we go up, we go down. Today, the market bounced back nicely on news. And again, it rallied well off its lows. But it only closed with a relatively mild gain. But the thing is, it wasn't able to break back above that 100-day moving average in any meaningful way. More importantly, the news that came out was that McConnell, the Republican minority leader, came out and said he put out a proposal to say we can keep the government from being shut down through November. Now, people worry, geez, that could happen by October 18th. Well, that's great. But you know something, the stock market hasn't been going down because they're worried about the debt problem, the debt ceiling. We go through these theatrics every few years. They threaten to do it, they never do. Everybody knows that. Nobody's been selling because they were worried about the debt ceiling, that we would default on our debt. Nobody's been worried about that. They've been worried about China and the deleveraging process they're doing there goes much further than just Evergrande. We have inflation. That's the reason people are very worried about inflation. And even the Fed chairman saying it's going to last longer than we thought. We have people that, you have the heads of Blackstone, not BlackRock, but Blackstone. You have the head of Mary Erdos, who's the head of JP Morgan Asset Management. She's one of they call her the most powerful woman on Wall Street. She's saying, these crazy gains we've had in the last year are not normal. They won't last forever. She's not calling for a bear market. She's not calling for a crash, but she's just saying that these things won't turn around. But my point to answer your question, what the news came today that caused all the algos to buy things had nothing to do with why the market has been going down lately. All those issues, China, inflation, concerns about earnings, Fed tapering, they're all still on the table. Interest rates are still higher. Interest rates did not come down at all. Those are still there. So I think that we are going to see lower lows before long.
Perfect. Okay, I think it'd be good to go through some of the examples of the picks you've made in the chat room using options, and just how you kind of found them, and how you're going to plan on using that strategy moving forward.
Right. Well, here's a list of several of them, QuantumScape was one. This is very interesting. This was one of those ones where I just keep an eye on the most active options. I do not go into those. Wall Street chat rooms. We have our own little chat room with professional traders, serious traders. We do not talk to. I don't sit there and start throwing out things, because what happens in some of those Reddit traders, they put in, they go out and they buy a stock with a really, with short interest in it. Then they, send some story up on Reddit, and the stock runs up, and then, they pump and dump. They pump it up and dump. We don't do that. Okay. But I do follow activity when I see weird activity in the options. And sure enough, on the 22nd, I saw some major buying in the quantum QS. I have put two parentheses there, but the symbol on that is QS, QuantumScape. And I noticed it the day before, and suddenly I saw a lot of call buying that morning. And we talked about it on the chat in the chat. We talked about some of the technicals on it, and sure enough, the thing kept going higher. And the call options in that one went up 500%, literally in just 2 trading days. And into it, we had, again, this had to do with it was just becoming overbought. We looked at what's called the relative strength index, the RSI, and especially on a weekly basis, had become the most overbought it had been in a long time. And again, everybody was bullish on the stock. It was just, it had so much momentum, but it run out of momentum. And again, we went into the puts there. I don't want to go through all of them here, but I just want to talk about ARK Investments, which I think a lot of people ought to play on. Again, this was one where we saw it, it formed on a technical basis. It formed in a descending triangle pattern. And when it broke below the bottom end of that pattern, I said, here's a great place to buy some short-term puts. And it's just several trading days days, 4 trading days, made over 136%. Nothing's perfect. Home Depot is funny because I talk about one of the best calls I made on Home Depot earlier in the year for the chat room at the very beginning of when we did the chat, was some calls or some put options where people made 500%. I'm sorry, anyway, from 300 to 500% on different calls, depending on which ones they bought. And I'm sorry, on puts, depending on which ones they bought. And the reason for that was that it had to do with lumber. It had nothing to do with the technicals on Home Depot, and nothing to do with the fundamentals. I saw lumber had become ridiculously overbought. It had to roll over. Sure enough, lumber came crashing down. The correlation between lumber and Home Depot, believe it or not, is very strong. It kind of makes sense, right? They got a lot of lumber. They're home fix-it people, right? A home improvement. And with lumber prices came down, Home Depot came down, people benefited. Now, I came in recently, saw a situation where we could go the other way. Lumber was trying to base and do better. I saw some technical patterns that looked pretty good. The stock did not react well. It initially moved up. It started to go down. At 20%, we said, get out. We like to keep it any kind of loss. And if you're on a stock position, limit any loss to 10%. Options, because you can make so much more on the upside, they kind of stretch that out to 20%. So, I readily admit, not everyone works out, but you can see from the ones there, they've worked out very well. And just when we had just the other day, started on Friday, the TQQQ, which is the basically the 3 times leveraged ETF on the QQQ on the NASDAQ. And it just seemed to be getting, the NASDAQ got crazy overbought at the end of the day on Friday. We came in and talked about this and why we really liked it at the very end of the day. And then here we got out of it up 125%, but some people in the chat room stayed longer. And of course they made a lot more. But that just gives you an example, a recent example that just happened just in the past week. Yeah, this was the one on ARC that we just talked about.
Hey, Matt, it's Rodrigo. How you doing, man?
Good.
Sorry to jump in here. We're just getting a lot of questions on the Zoom chat and on the YouTube chat about your chat room. So just going to do it pretty quick because we do want to focus on the education here with Matt, especially in these markets. So for today, we're doing the 70% off Matt Maley's Inner Circle chat room, where you'll be able to trade stocks, options, all that stuff all day with him. And it does include a free laptop. We'll be throwing the links there in the chat, and you can always find it in the description there. Just wanted to get that out of the way because we are getting too many questions on it. Go ahead, Matt.
Great. Thanks, Rodrigo. I really appreciate it. I think this is what I just talked about. ARC, it had broken down on its stock on a technical basis, and even though she had been selling, Kathy Woods had been selling Tesla, and people are like, well, geez, Tesla's going up and she's selling it. I said, well, that's one reason the stock went down. But on a technical basis, I really thought that, it was breaking down below that descending triangle pattern. And look what it did. We kind of stuck with it, was making some money. And then the big move came when it finally became evident that the stock was breaking down. And again, 130, almost 140% in 4 days. So that worked out really well. I just want to say one thing really quickly too, is that, I talked about that situation last year where I was really pounding the table on energy stocks. Well, I've gone into this group, whether it be the KBE, the KBE, that's the bank, the XLE, which is the oil ETF, and the XOP, the oil and gas ETF. And we went into those really saying that, pounding the table, you gotta like them. And so we went in full board. But since over the year, several times I've come in and said, okay, let's cut our positions in the XLE and the XOP by 50%. Okay. And then later on, I said, okay, we'll go back to 100%. And in those cases, those were also good times where you could buy, hey, I'm going to go back to 100% on my XLE position, but I'm also going to buy some call options. And vice versa. Hey, I'm going to cut back on some of my XOP position, but I'm also going to add a few of the, take some of that money that I just raised and buy some of the puts. And this is what, just give you an idea of what happened here. And again, we look, I'm going to take a little bit of time on this one, and then I don't want to take too much time on any one thing, but here's a situation where we used all sorts of different reasons for my changes. Here, again, I talked about what I thought about energy. Oversold, underowned, overhated. It was just a great opportunity. It did go down a little bit, but then it took off. Then I came in here, we saw on a technical basis, a golden cross. The 50-day moving average crossed above the 200-day moving average. I said double down, it just took off. dipped a little bit, still liked it. It went well. I said, take some profits up here. Okay. This was in March. Came back down. I said, no, let's go back in. This thing is becoming oversold. And a lot of people on Wall Street away from us were finally turning bullish on the group. It did go down a little bit more, but then up it went. Then it came overbought. But see here, I said, take some profits here because look at its RSI chart. Okay. It had gotten very, very overbought. Its relative strength index, whenever it gets above 70, that's a warning signal. So I said, take profits. Here it got up to that level again. I said, take profits. Now here we said get back in. I was a little late. See, I should have gotten in when the thing became oversold here on its RSI chart. I didn't get back in. I got a little late, but didn't matter. We went back up. And again, here was a situation where people in the chat room were able to not only get back into the stock, but buy some calls on individual names. I'll show you where we bought some calls in Chevron that worked out really well. But also, and again, a stock like Chevron has is a very liquid name, and their options are very liquid, so you can, they're very easy to trade. Now we're getting back to a point where it's getting a little overbought, and we've been talking about in the chat room and in the tier 3 call that especially natural gas is getting overbought on a near-term basis. So I'm really kind of saying now we ought to pull back, and if the overall market pulls back like I think it will, some of these energy stocks can come down as well. So I think people should cut back a little bit there, and even look at some puts in that and in the bank stocks, which is another group I still love on an intermediate long-term basis, but they've outperformed. And when the market finally sees that correction, everything will go down, and even the leading groups, and those will be ones where we can make some money too. This was just one where I mentioned the Viacom. This is the reason I turned ridiculously bearish on the stock, even though it's a great company. Look at the RSIs here. The relative strength, and it's got overbought. It got up into the 90s. You get something above 70s bearish, above 80s crazy, above 90. That's why we were able to make 2,500% and more on that call. And I talked about NVIDIA earlier. Everybody loved the stock. I saw that it became overbought on a technical basis on its relative strength index and its MACD chart, which is basically a way of measuring. It's kind of like it's a short-term death cross. You have golden crosses and death crosses. That's when the 50-day moving average crosses above the 200-day moving averages. That's a golden cross. It's a death cross when the 50-day crosses below. And this one is it's short-term. It's 9-day versus 12-day. But it can be. But I said, look at this. Look at the last time it had a negative MACD cross. Look what happened to the stock. Each time the stock went down, made a great call. Stock, fell out of bed. Even though it's a great company, even though it's going to go a lot higher over the next 10 years, we were still able to make, in the several 100% in just a few days. See, this is what NVIDIA looked like 5 days later, and we just killed it in the options in that name. And I just told you about Chevron, how I said we got back into the stock. This is the where it became oversold. I talked about that in a second, and this is what happened with the options. They came in, this is back in July, but we came in here and we loved it. 330% in less than a day. 330%. That way, again, I wish they all worked out that well. And again, the Home Depot is not the only one that we've lost money in, but the thing is, when you can cut your losses quickly to the losers, we can also, when we make 50, 100 more % on these other names, you're never going to bat 1,000, okay? But if you're batting 700 or 800, it really adds up, and it's really nice, and it enhances those long-term returns. I mean, people should own Amazon forever. That's great, but you can trade around that position just like I talked about trading around the oil positions and maximize those returns. And I also help people save money. I mean, Netflix was really flying here earlier this month, and I was like saying, people are asking me in the chat room, should we buy it? Should we buy it? I said, no, look at this RSI chart. It's getting ridiculously overbought. Let's avoid it. It's becoming very vulnerable. Some people, I didn't flat out say buy calls. I'm sorry, buy puts in the name. Some people did though, and made some real nice money because 70%, look at that, 7% decline. You get a 7% decline. Guess how much the puts go up? They go up several 100%. But again, this is a case where I can only take credit for people saving the money because they were talking about trying to buy calls because the momentum had been so strong with this rally. But guys, other people were able to, traders were able to, some people were able to make some money, even more money. And not just save money or avoid losing money, but they were able to make some money as well. Lululemon, we don't care about. And there's just some other examples. I don't want to get.
Hey, Matt, there was just 2 questions in regards to your chart there. So One from Al was what hours? Oh, that's a chat room question. For your technicals, what time interval chart frames do you like best for your analysis? That's from Rudy Daniel.
Well, again, I'm not, when I say a day trader, where some people are every single, like they're buying and selling the same thing 3 times in a day. That's not really my background. Some people, you really have to be watching that every day, all day long. I do watch it every day, all day long, but it's hard to tell other people how to trade that way and adjust them. So I look at more on daily trades, but I go back as far as I need to. I look at the daily charts, but I go into the weekly ones for confirmation. That's when you get the really big, like I said, the really big turning points where you can really have confidence and say, hey, I can make, this one looks really enticing here. Let's buy a few, let's buy, a couple $100 worth of calls on this thing because it's oversold on its Bollinger Bands. It's getting extremely oversold on its RSI chart. But all of a sudden, you have one where it's the same situation, but it's way oversold on its weekly charts. Then you say, okay, I'm going to max out here. What's the max I would put in any one trade? You've never put 100% of your money in any one trade, but let's say I'm putting $50 on everything. Maybe I put $200 into this one, or maybe $200. I'll put $1,000 in, whatever it might be. That's when where you get more confidence. Where you have more confidence, you're willing to put in more money. But I look at I guess the best way to answer it is that I always go back into time. Because when you have an RSI chart or a MACD chart or a Bollinger Bands chart on a specific stock or ETF, it's different for each one. We see a stock like IBM. I mean, it's not, or General Electric. It's not going to get way over. Coca-Cola. It's not going to get crazy overbought. They're not going to come up with a new technology that's going to change anything. So they're not going to get the kind of momentum that gets it crazy overbought. So when its RSI chart gets anything above 70, I'm like, whoa. Okay, watch out. But if Apple or Tesla or something like that gets above 70, I was like, it's been above 70 a million times. That's not a big deal. Let's wait till see if we get above 80. And so we look at all these things and you go back into time, look what's happened with that specific asset to really give you the confidence you need to make a bet. Because let's face it, when you buy an option, you can lose money very, very quickly. And so you don't want any guessing. You want to make educated decisions, not stick your finger in the air and make a guess.
Perfect, Matt. So I think it might be, we'll get in some tickers with the chat later, but I think let's give them a little bit of a bone here. So we're showing them some of the successful picks that you've done recently in the chat room and prior. Let's talk about, I know you've mentioned a couple of trades recently in the chat, even like today and this week, but can you just share maybe one stock right now that you're bullish on, or not even bullish, just some trade idea that you have right now that might include an options trade or something that you think can bring in a good return in a quick amount of time?
Sure. Yeah, I've got a perfect one here, and I'm going to start with the ETF because it's going to set it up for the one specific stock that I think has a lot of potential. Not quite there yet, so and that's why we haven't talked about it. We've talked about it in the chat room as a potential play, not as one that we've wanted to jump in yet. And this is, you can see with the semiconductor, the SMH, which is the semiconductor ETF. Of course, it's the chip stocks. And you can see it's already broken below its 200-day, its trend line going back to last March to the lows from the pandemic lows. Okay. But so this is rock solid support, 1, 2, 3 times, even a 4th time there. And then, oops, a lower high and then a lower, and then we've broken below that trend line. We have not, and it's a mild lower low right there. However, the key level you can see right here is 250, all right? And it's very close to its 200-day moving average. It hasn't been below its 200-day moving average since last May, okay? I was watching the groups today. Micron Technology is a big name, and Taiwan Semiconductor, which is the biggest name, it's the most heaviest weighted name in that ETF. They did not act all that well today. They did bounce back at the end of the day along with everything else. But so if this thing breaks below its 200-day moving average, after already breaking a trend line and making a higher high, below the trend line and making a lower high, lower low, and it then breaks below its 200-day moving average, this is going to be a problem. Now, some stocks have already taken it on the chin in the chip sector, as I mentioned. Micron's down a lot. I think it can go down lower if the SMH breaks the 200-day moving average. But you want to look at some of the stocks that aren't broken down so much. And this is, whoopsie. Sure, okay. Oh, there it is. Okay, AMD, Advanced Micro Devices. Now, it bounced back nicely again. But look how many times this thing, now you can see down here, it's RSI, is basically basically right in the middle. It's not oversold. It's not overbought. I mean, it gets slightly closer to oversold, but again, very, very neutral right there. So it's not as oversold as some of these other names are. And you can see how it's tested that 100-day moving average, and even if you count today, which it came very close to, that's 4 times in the last 2 weeks. And this is what we call a descending triangle pattern. Buyers keep coming in here, but the sellers, here it was like, okay, great. I'm going to buy this thing. It looks like it's going to take off and make a nice, no, it didn't make it. And then it bounced again, another lower high. Got down, bounced again. Is it going to make another lower high? We don't know. So we have a trigger point at $100. Again, you can see it's slightly below $100. It breaks below $100. There's a very good chance that this thing, it will show that it's lost a lot of momentum, that the buyers, those who've been staying there buying at $100 are going to go, oh no. And their algo is going to tell them to go from buying at $100 to getting out of it right away. And the stock's going to get hit hard. And it's going to play catch up, or should I say catch down, with some of these other semiconductor stocks that have, and even though this stock has come down, certainly it has not come down anywhere near some of the others. But you see how that's been such a key level, and it's not oversold. So if it does break down, again, Micron is not oversold, but it's getting there. It's getting close. This one's not even close, so it's going to give it much more downside potential, and that's what we're going to look at. So, and we tend to go with the puts or calls that are basically at the money. Those are the ones that you can go way out of the money. You can make a lot more money if you're right, but you have to be really right for you to make any money. You can lose money very quickly. So we used to go. So maybe when it gets to 99, we'll be or 99.5. We'll buy the $99 puts for the stock. I think to drop, and it wouldn't surprise me if it got all the way down to its 200-day moving average. If you go out about 2 weeks, you can make some real nice money than that one. So that's a specific one there.
These are great trades. I remember the last time we did a webinar with you, Matt, you made a call. I forget what the specific stock was, but I feel like this happens every time we do a webinar. You mention a pick that you like or a trade that you like, and then whether it's a couple of days after or a week after, that trade is super profitable and super good. So, we'll see the next. You'll see the emails if you register for this webinar or not. The follow up to SMH and AMD. So that's pretty exciting. Do you have any other more in your presentation? Otherwise, we can go into Q&A and tick around for some of the folks here, because I know they had some questions.
Yeah, I just think we've been kind of going through. I've been yapping a lot here. So if you want to go, I can pull up my trusty Bloomberg right here and go over other charts. What's this? Was I terminate I may have to log back in.
Okay, that's all right. While you're getting set up there, maybe if Rodrigo is there, I know we had some questions about the inner circle chat room with you. So Rodrigo, I don't know if Rodrigo, if you're still kicking around there or not. Okay, I think.
Yeah, what's up? Yeah, I'm here. Yeah, there were a lot of questions about the chat room with Matt. I'm pretty much there all day. I always have it open next to me, just because, I think the past 2 corrections, Matt has called them like literally like a day apart. So he's definitely a wisdom tree when it comes to corrections.
I took your TZA trade, Matt, just so you know.
Which one? The TZA. Okay, good.
TZA, yeah.
Let's see what happens there. It's such a key time in the marketplace here. And I really think we're going to get some
all right,
great
opportunity. So
yeah.
Everyone in the chat, this is Zoom and YouTube. Drop in your questions. Let's go. We're gonna answer your questions. Any questions that you have, drop them in the chat. I'll do my best to kind of pass them over to Matt. So maybe we can start with Q&A if you want to have some tickers in there. Then we can kind of do that. So first one, Tom Green in the Zoom wants Palantir, PLTR.
Okay, I always like to pull it up. Can you see it okay?
I don't see the Bloomberg. I still see the weather the storm.
Oh, you don't see the Bloomberg, huh? Let's see. What did I do? Huh. I don't know what. I'm in share, right? Well, let me.
Yeah,
Oh, there it is.
shares-
Resume share. Sorry, I had to hit resume share. Can you see it now?
I still see the presentation for myself.
Uh,
It might give multiple screens, Matt. Maybe you have sharing the one screen and not the other one. Or maybe turn off your share and then reshare.
well, resume
We're getting some good questions in the meantime, so everyone, we're going to answer your questions for you for sure. There, I see. Okay, I see the semiconductor ETF.
No, yeah, that's just an old. I'm going to try to get rid of that. How do I get rid? Okay. Oh, you know what? Let's see this game. See what does that to me. Okay, let's go. I'm sorry, this has worked each time before.
Let's do this. I'm gonna share. I'm gonna stop your screen from sharing. I'm gonna share, and then I'm gonna stop sharing. Okay, can you share your screen now again, Matt? Just redo it.
Okay.
There we go. Okay.
How's that?
Now we can see it.
Okay, great.
Everyone in the chat, just put a 1 if you can see the chat. If you can see his Bloomberg chart now. All right, perfect. Okay, we're set. So Palantir was the first one, and then we'll go through a bunch of these questions here. Avmi wants to know if the market's bottomed. Okay, so let's start with Palantir, and then we'll go from there.
Okay, well, this one here is, you can see it's been kind of. Hold on a second. Just need to move this over. Okay, good. Okay, it's trying to bounce off this, you can see here with RSI, its relative strength is getting oversold, but not as deeply oversold as it has at other key bottoms. You see that there and here. It got down there, it got close to it here. And what it's trying to do right now, and I'm gonna just take something out here to give you, so you don't have so many darn lines to look at. See this purple line, that's the 200-day moving average. It got right up to that. So let's look at one other thing right here. I'm going to look at its MACD chart again. Remember that MACD is the is kind of like that golden cross. Let's see if it's getting a golden cross here because it's probably getting close. Nope, it's really not. So it's still looking dicey right now. So the key is right now, what I want to see is get a break above that 200-day moving average. So it's basically at $24 there, sorry, $25. And if it can break above that level and see the MACD turn back up like it did here and like it did here, that's going to be bullish. But right now, I'm kind of neutral on the stock. It looks like it's going to try to do better. But if the overall market gets hit, like I think it will, I think it'll probably pull back down here and retest those lows that it saw recently. Now, not a disaster. It's not one I want to be getting short. It's not one I want to be getting buying puts on. It's one that I want on the buy side of on my list and trigger it if we get that break above the 200-day, especially if we get the break above the. I'm looking here too. I just want to see what happened to the stock today. Just while I have you, stock today. Okay, there's the stock today. This is a market that went from being down a lot to being up a lot, and this stock went down. That's not a good sign. So it's that 200-day moving average is no question is providing very tough resistance. So I'm going to hold off until I see a break above the 25 level.
William Sandoval wants to know: do you do any diagonal options?
I do not.
Yeah. So the chat room for everyone who's listening, they're, and you can tell me better, Matt, but from my understanding is they're mostly simple calls and puts that you do to trade around certain stocks that you're already trading. So if you're long a certain company, but you think it's going to have a short-term drop, you'll put some puts in there and make money on the way down and then more money on the way up, right? If you want to explain.
Well, yes, but I mean, everybody in the chat room has different portfolios. So I'm being asked about stocks that I don't that I don't hold, that I don't, I don't really follow that closely. But I can still look at the charts and have a good opinion on it, and look at the fundamentals on the thing and still have a good opinion on it. So my point is, I do favor people trying to buy puts and calls and stocks that they don't own. Don't just trade. It's great to trade around things that you do own, but there's sometimes it's like QuantumScape. I mean, who owns QuantumScape? I didn't. Maybe a lot of people do, but it's just not something where. I still had a good opinion on it because I saw what was going on on the technicals. It looked like, and that I saw this call buying in the stock. So even though I've never owned it, I still went ahead and suggested buying that stock because it's just, or buying the calls in that option. So yes, but it's usually, to answer your question, we can do any stock you want. People come in with stocks I've never heard of. And sometimes what I frequently say is, I just don't know this stock, and we move on. But if I do, we'll take a close look at it and try to take advantage of any kind of big moves. But I do try to kind of stick with the puts and calls. Sometimes, again, we'll go into some straddles, strangle here and there, but mostly puts, calls, and once in a while straddles. It's just kind of, I'm a stock trader by trade, not an options trader, and that's really what, and what I've had success at. So it's worked really well.
All right. So Dirk wants to know which time horizon for options do you pick? Weekly, 2 weeks out, etc. ?
We go all different ones. All different ones. We do usually. It's funny because I like to look at things a week or two out. That's kind of what, especially when things are volatile right now. However, because these moves have been so wild lately, they've just been for a couple of days. And when that's the big thing for me is that if you make 400%. Now, again, Viacom was an interesting one because it came so ridiculously overbought, and it came down so quickly that we were able to make a lot of money. But if somebody makes 300, 400% in 2 days, I'm not going to say, why would you sit and hold on to the take your profits and move on, or at least take profits on 80% of your thing and hold on to the rest of it for a little while. You can do that. We talk about that in the chat room. But it's not, so I'm not tied to any one thing. I don't usually go out more than a few weeks. Sometimes every once in a while, for instance, with this call on with the market, worried about the market, the VIX I think would take off. So we were talking in August about buying VIX calls because if the market goes down, the VIX is going to go up. And we went out into October and November, and those are working out well. But usually it's in the next few weeks because that's really what we're looking for in those options trades. Again, if you have a really strong thing that's both fundamentally and technically based, and you want to go out a couple of months, that's great. But we tend to concentrate on the more shorter term ones. And every once in a while, frequently even, sometimes those just turn into trades that are just a few days. Although you say, I guess my point is we buy them. We also have what's called lottery tickets. And every once in a while, something gets incredibly overbought or incredibly oversold. The options expire the next day. And I say, listen, how much money do you spend on a lottery ticket? Well, if you're smart, you spend money that you don't even care about. You spend a few bucks and you lose money and you just walk away and you don't care. Okay. So that's what you do. You want to throw $50, and if you don't care about losing $50, go ahead. Because you know something, if you buy that thing and it moves big in the next day, you're going to make 500. You can make 1,000%, and suddenly you've got a lot of money. And then you can play with that a little bit more. So we do even do those, but mostly it's a week and a half, 2 weeks out. And then if we get a profit within just a few days, we'll go ahead and take our profits.
Yeah. I always love looking for your lottery ticket emails because I always like to hop in those too. And they all, I think most of them always pay off big. So
and that's the thing, because you're not just when you're throwing money but it's like, again, it's an educated thing. It's like, wow, this stock is really oversold on Bollinger Bands, RSI. Everybody hates it. Sentiment stinks. And if this thing bounces, it's gonna bounce 10% in a day, which means its options are going to bounce 800%.
All right. Avni wants to know, has the market bottomed?
I don't think so. I think that the headwinds that we're facing right now are too strong. And, it's interesting. I mentioned what Mary Erdos said, the head of JP Morgan Asset Management. We also, again, the president or CEO of Blackstone, again, that's Blackstone, the private equity firm, not BlackRock, but incredibly profitable. And again, there's one thing, and Harvey, you've heard me say this before. If there's one thing I can leave you with today, one rule for a long-term basis: whenever insiders sell, that's not a good sign. And part of being what insiders do is they take companies that have been private a long time and they sell them. Goldman Sachs, they went public in 1999. They were really smart people. Guess what happened a year later? Less than a year later, the market crashed. The reason why I thought about this is Blackstone. In 2007, they had been private since 1982 or 81, and suddenly decided in 1987, we're going public. We're selling our shares. We're selling our private partnership to the public. And guess what happened 6 months later? The market crashed. These guys are really smart guys. And this guy is saying right now, the president is saying that he says it's a good time to sell assets. He's not looking for a crash. He says, I'm not looking for a crash. But it's just with all the liquidity that's been pumped into the market since the pandemic started, that's starting to come out. And this is his words. And therefore, it's time to take profits. And I totally agree. And what's going on, again, what happened today, we've gotten lulled to sleep by thinking that 5% is all we're going to get. 10% is nothing. It's not that big a deal. It won't clobber the market on a long-term basis. But it's normal. It's healthy. And again, what happened today? The bounce that happened today was based on just a little, based on nothing that was really hurting the market. The things that are hurting the market, the issue with China, it's not, I mean, we have to worry about China and Taiwan but China is deleveraging, okay? That's what Japan did in 1990. They lost a whole decade after they did that. They did 1989, at the very end of 1989, they went on, did exactly what China's doing now, and they lost a full decade. China's not gonna do that. They want to be a world power, but they're doing things purposely so that they don't have a big crash like China ended up having. Okay, they're doing that. The Fed is tapering back on our stimulus. We're not going to get the huge thing out of Congress. And people, it'll still be big, but not $3 trillion. There's less liquidity going to be sloshing around. Some of the froth has to come out of the marketplace. Interest rates are moving higher, even though they're still low. They're moving higher. Last year they moved higher, caused a correction. This year they're moving higher. It's going to cause a correction, in my opinion. Inflation, et cetera, et cetera. Nothing has changed. Today's bounce was based on something that was just a minor thing about the debt ceiling that everybody knew was going to get fixed anyway. And once people realize that those headwinds are still out there, I think the market will roll back over.
I really like this question. We'll do one more, and then I think, Rodrigo, we're getting a lot of questions about mass inner circle, and we'll spend some time answering it. But I like this question from YouTube on, I think, Rolladon. How do you find such lottery tickets to buy? I think that's a great question. Just maybe walk through your process and how you found your last lottery tickets, or how you're looking to plan to find your next one.
Well, I mean, I have alerts up. Frankly, I see, again, like everything else, I can't look at 5,000 stocks every single day, right? But, you look at groups, and one of the things I'm looking at right now is the biotech area. The one area that is, I mean, a lot of groups have been hit a little bit lately, but the IBB, that's not the internet, the biotech stocks. Look how hard they've been hit. Okay, they've been hit much harder than anything else. They dropped below a 200-day moving average. That's good, but look how oversold it is. So I'm starting to look at that. Well, that's going to be will I look at that on Friday? If this thing gets hit hard again tomorrow, well, I'm going to start looking at that, but I'm going to look at some individual names. Here's Amgen. And so what I have these alerts up on the groups. And then when I get an alert, I say, okay, I'll look at some individual stocks, especially the bigger names, because they have the most liquid options. If you can buy options in a real illiquid stock, and it's great. You're up a gazillion %, but you can't sell the option because there's no buyers around. So it's better to really play in the liquid names. But here is Amgen. And look at this stock. I'm just noticing. Again, it's been bouncing along the low here, and BI. That's not as bad, but there was let's see how this one's doing. See this? Now it's starting to turn up. Look at that. Okay, it's been oversold for a really long time. It's finally starting to turn up. And you see how the stock's trying to turn up. So this one, again, this could be our lottery ticket for tomorrow. We'll see. Let me see. Look at the MACD chart. It's MACD. Oh, it's getting a positive cross for the first time since God was a child. No, I'm kidding. The first time in a while, but it's very oversold, more oversold than it was here. Very oversold in its RSI chart. This one could easily see a sharp bounce up to its 200-day moving average. So again, that's one where I've just noticed that it's been going the opposite way of everything else. And no matter what happens to the stock market, whether the market goes up or down, when something gets this oversold, it's not going to pay attention to the market. At some point, the rubber band bounces back. And let's go look at one other thing here on this name, because I want to look at its. What did I do here?
What's the ticker you got there, Matt? I'm going to drop it in the chat for everyone to take a look at, because
yeah, it's Biogen, BIIB. Okay.
BIIB, everyone.
Yeah, so Bobby, Isaac, Bobby.
Yeah. So to answer your question there, Dupre, that's how Matt finds his lottery tickets. And
so yeah, I just look at things all the time and what's getting overstretched, and then I'll look at all the sorts of different charts. You can see the RSI and the MACD are charts I look at. The Bollinger Bands. And what the Bollinger Band does is that's a really short-term one. That's really good for the lottery tickets. We got a great lottery ticket on NVIDIA when it's Bollinger, and on Netflix when it's Bollinger Bands chart. And what that is you take the 20-day moving average, not the 200-day, the 20-day moving average, and you say 2 standard deviations above or below that. And and that's where the above line, if it gets above that line, it's incredibly overbought on a very short-term basis. Gets below that line, it's incredibly oversold on a short-term basis. And when that happens at a time when the RSI is also down, and when the MACDs are starting to turn, et cetera, you pull them all together every once in a while, and more often than you might think, you get these opportunities to get a lottery ticket and really make money off a short period of time. But again, when you buy one that only has one day where the option expires the next day, the chances of your money going to zero is high. So you really want to make sure you don't put a lot of money, you put money in that you don't mind losing. And then, let's say if you took $50 into $500, then suddenly the next lottery ticket comes up and you say, okay, well, I'm going to put 250 in it. Why? Well, because I can afford to live it. I'm already up. And then if you win on that one, suddenly you got 4,000, and now you're trading, and the whole thing feeds on itself. Did I lose you?
So I think, Rodrigo, maybe you want to answer a couple of questions in the Inner Circle chat room that we're getting, and then we can continue with Q&A. Kyle Wren, we will get to CPRX, I promise you. Rodrigo, are you there? Okay, I think Rodrigo might have froze out.
Yeah, he's a little frozen there. But
so okay, let's do it for Kylo Wren. I know he's been asking. So CPRX, let's do that ticker.
CP is in Peter, RX?
Yep, CP.
Right, there we go. Okay, now before I say that, I just want to say one other thing before I talk about this chart. It'll only take 2 seconds. I just want to say, although I'm concerned about the market, calling for a correction is not, I'm not a perma bear that just saying, oh my God, the world's coming to an end and it's 2008 all over again. I'm saying is that the stock market is just overbought, and there's some headwinds here, and that's why I'm bearish. Believe me, one thing I love about it is that I can't wait for the market to get washed out, because, man, we're going to make some money on the long side. We're going to go back into our names that we really love in common stocks. We're going to be buying those, and then we're going to go back into the when the market gets washed out, and if there's some forced selling. Remember, I talked about how the huge amount of leverage out there, people get some margin calls. Oh my God, that is the unbelievably great time to buy options 2 weeks out. You can make a real lot of money. So anyway, to get back to this though, here we are on this name here. You can see the huge rally it's had here. Now look at how it's up here to the 6 and 625 level, close to it, 610, 620, third time. It's not. I like the fact that it was able to bounce off. Okay, let me get rid of some of these lines here, just so they don't confuse you there. Okay, that's the purple line's a 200-day moving average. I like the fact that it was able to bounce off of it, and it looks like it wants to break out to the upside, right? But this has provided some good resistance the last time, and it may go a little bit higher, but look, it's getting overbought on its RSI chart. And see what happened when it got to this level here? See, it didn't even get to that level here, and it came back down. And again, it got a little bit higher. It could go a little bit higher. But near term, this could be a lottery ticket for Friday. I don't know how liquid their options are, but I want to look at one other thing here. Let's look at its Bollinger Bands chart at study. Bollinger Bands, thing, update. I'm going to get rid of that 200-day moving average just because it makes things use. Now look at the Bollinger. Look how far above it is. I'm going to zoom in on this. Wow. I think you just got my my next lottery ticket. Look how far ahead above its Bollinger Band chart it is. It looks like it's 3 standard deviations above its 20-day moving average. There's no guarantee the stock's going to come down. We actually played this in NVIDIA twice, and it, not as a lottery ticket, but just saying that it was getting stretched. Let's not chase it here, so we didn't get hurt on it. And then finally, when it got like this extended, we went in and bought some puts and made some nice money. This stock is really extended here. I guess my point is it might finally break that level, but I think that 620 range, and when it does, it's going to be really bullish. I just got to think that you very rarely see a stock get this far above its Bollinger Band chart and keep rallying immediately. It could go a lot higher a month from now. It may go a lot higher a week from now. But this is time for this stock to pull back.
Yeah.
So,
and I love this. I think that's the perfect example of why the Inner Circle chat room is so valuable. With all the other members on there dropping tickers and giving their insights, there's so many new ideas that come from there. So,
exactly.
Kylo Ren, thank you for bringing that up. That just gave Matt another lottery ticket to share. Highly encourage you. You should join the Inner Circle there, Kylo. Like, you'll get a lot of value. I think Rodrigo's back. Rodrigo, can you hear us?
Yeah, I can hear you.
He's here. Okay, perfect. So Rodrigo's going to take over the hosting of this webinar moving forward. I got to run a little errand, but you guys are in good hands. Rodrigo is a trader himself. He's in Matt's Inner Circle. So maybe if you wanted to start off answering a bunch of the questions we're getting about the Inner Circle.
Yeah, so we've definitely gone over a lot of tickers, and we'll keep doing that. We just want to at least get the chat room questions out of the way for the moment. So if you guys have any questions, let me know. But as far as like from what I'm seeing here, the questions that you guys have, it's a chat room that's open all day. It's not like you can only post like at 7 a.m. Everybody who's in Matt Maley's chat room is a verified trader. There's no fake bots. There's no like bots or anything like that, the kind of stuff you see on like Reddit and those kind of places. So it is a curated chat room. Matt is pretty much directing the stream of what we're doing in the markets. I think I mentioned this before. He's basically timed the last 2 corrections, and the last one was in February, and all of his members were pretty much aware of it in cash to buy a good opportunity. Once the stock market dipped, and right now as well. Obviously, he's been doing this for 40 years, but we haven't known each other for that long. But yeah, the chat room is basically open all day, and there are people from all over the world. So somebody's in Taiwan or Hong Kong or Europe. They have a different hour, but every message basically gets responded to. Every trade idea. Something I see a lot there is people bringing in their tickers. So just like you guys are bringing in your tickers, that's what a lot of people do in the chat room. They basically bring the ticker to Matt. Matt does his analysis. He does his technical analysis on it. He does somewhat fundamental research on it, which is a mix of what he presented before, what he does. And anything else related to the chat room, you guys can ask whatever it is. And he also trades options on a short-term momentum basis. So a lot of people think they can only make money on bull markets, but Matt Maley definitely proves everybody there wrong, because he's been able to profit on bull markets, on bear markets, choppy markets, ape markets, Fed-driven markets, rate-driven markets. It's really something that I don't see a lot of people do, and I do have to give credit where credit is due. Matt Maley is really great with his picks, and personally, I've been trading his picks since I joined here for like almost a year now. So I'm a big fan. All the work he's done, 40 years in the game, that means something. And I remember that Viacom short he was talking about. That was pretty crazy. He called it, I think it's like 2 p.m., something like that. And then as soon as the after hours come at 4 p.m., Viacom did an offering. So that tanked the stock even more. So if you would have held it to the bottom, it would have been like a 5,000-10,000%, but we sent out the sell alert at 2,500%. So yeah, I mean, Matt does a little bit of options, but trading the volatility, benefiting from the volatility. So I have a question there from Pat. Somebody in Taiwan get a free laptop. We'd have to work it out. We'd have to see. We make our best attempt to send it everywhere in the world. Sometimes customs make it makes it difficult, but you can always reach out and, we can discuss it. And otherwise we'll work something out for you. And if you don't need the laptop or you have questions about the laptop, just contact me. I put my information there in the chat on the Zoom conference, and I also put it on the Benzinga YouTube. So just wanted to go over that really quickly because we're getting flooded with these questions. Matt, so all right, let's make this fun, Matt. So do you want to do rapid fire ticker style? Do you want to talk about your expectations about the market? What do you think would be great that would add value to everybody who's watching here? Just trying to a little bit on the fence, like, hey, do I want to trade in the chat room with Matt, all that stuff?
Well, a couple things real quick. And is this number one? By the way, even in the US, I'm scheduled to be on CNBC tomorrow, by the way, at 2:45. I'm on pretty much every week. I'm scheduled to be on CNBC Asia next week. I'm also on Lafante International out of Milan, Italy, pretty much every Tuesday morning here. It's about midday in Italy or in Europe. So anyway, you can look for me there, and Bloomberg TV as well, Bloomberg Radio, et cetera, et cetera. I was on Bloomberg Radio already this week. But more importantly, as for the market overall, I think this is the kind of choppiness that we've seen right now is exactly what you see when it's not a healthy market. And so I really do think that the key is so often that for decades, I mean, when markets get hit, it's been so hard for the individual investor to make much money because if you bought an option, usually it's like, okay, the options only expired in March, June, September, and December. So you had to go way out. And that can get expensive, and because there's time premium. And you now on these ETFs, you can get on the index ETFs, the SPX, the QQQ, the IWM. I don't know about the IWM, but the QQQs and the SPYs, which is the S&P and the Nasdaq. You can get one for this Friday, Monday, Wednesday, Friday, Monday, Wednesday, Friday. You can go out as far as you want or as short a distance as you want. And people couldn't do that in the past. People couldn't do that when the dot-com bubble burst. Again, I'm not saying we're going to have a repeat of that, but you have so many better and more liquid things. And of course, you have inverse ETFs and leverage ETFs. So we are so much better equipped to be able to not only handle a downturn or correction, to be able to profit in it. And back before I started the chat room back in January and early February of 2000, I was pounding the table saying, this pandemic is for real. It's going to clobber the market. And, telling people, raise cash, buy some hedges. The people who did that, followed that, really benefited very well. I think we're in that kind of same situation. But I'm not a perma bear. I'm not saying, oh my gosh, sell everything, start buying guns and butter. That's not the thing. We just want to profit, take advantage of it because I think it's going to be deeper than expected. With that said, throw me some. I can throw me any tickers you want, and I'll be more than happy to go over those stocks and or ETFs. And also ask any general questions, whether it be macro or on specific groups and things like that, if you'd like as well.
Okay, great stuff, great stuff. And I just want to clarify everything that we go over in the chat room, everything that comes from Matt here that you get as a Benzinga chat member, that is something that we only discuss in the chat. That's not discussed on like Bloomberg or any other place. Typically, they ask for Matt's opinion there. In the chat room, you're going to get Matt's like personal trades that he's on there. So we got some takers here. Nigel, great to see you again. Loyal member. He wants to look at Pepsi, Matt.
It's an interesting one. Because here's a stock, I mean, it was funny because I was asked about this stock just recently in a radio interview, and I was just talking about how that 150 level was a real nice support on a very, very short-term basis. You see the stock has had this huge run today. It's bumping up against its 50-day moving average. Let me get rid of that green line. So again, I hate to have too many lines here, but look at that. So here's a stock that's underperformed. It's a defensive name. It's and they don't just own Pepsi. I mean, they have Pizza Hut and KFC and things. They are. But the point is, there are consumer staples. I know that you think of a consumer discretionary, but it's really consumer staples. People still like to eat, and especially nowadays, they want to go out to eat. And this is a stock that will do well. So it held the 150 level. That's really good. It's bouncing nicely. Its relative strength index is not overbought by any stretch of the imagination because it's bouncing off that support level. And let's go look at the MACD chart again, which is a momentum-based chart. And look at this. It's MACD is about to cross positive. Now, what we want to be careful on this MACD chart is we want to make sure we see it. So what I'm guessing is you'll probably see the stock pull back a little bit, but near term. So I wouldn't necessarily want to jump in right away, first thing tomorrow morning. But if you get a little, and again, it's okay. If you already own it, that's great. Hold on to it, but don't be afraid to add to it. If it after it pulls back a little bit, takes a breather after that huge move today, breaks above the 50-day moving average, gets a positive MACD, then you're really looking good, because we want to avoid that head fake. See what happened here? It looked like it was going to get a nice MACD cross. It didn't happen. It happened and then came right back down. Of course, the stock came right back down. I just want to get this 100-day moving average out of the way so people can't be confused by it. There's the 50-day. That's the yellow line. See how the 50-day moving average was support there? It came, and it provided support. Then it broke below that. As soon as it broke below that, that was net lousy. That was very negative, okay? But now it's getting right back up to it. One of the key rules in technical analysis, old support becomes new resistance. So now this is new resistance. It probably won't be able to break it immediately, just like it couldn't break below it immediately, probably pull back a little bit. But when it breaks out, and once we get a confirmed a MACD cross, okay, here that was not a confirmed one. It barely made it. Once it became more meaningful, like we saw here, look what happened to the stock. Straight up. Look what happened to the stock. We had a nice, again, we had some head fakes along here that told us nothing. We got a nice confirmed one down here. Look what happened to the stock. Straight up. Okay, so that's what we got to avoid, that head fake. Be careful on it very near term, but we'll be talking about this one in the chat room. When we get that positive cross, that's when we're going to want to get into, both in the common stock and even look at some call options as well.
Good stuff, man. Love the analysis. Love this analysis on the go. Let's hop on to the YouTube chat. Let's see, ticker there, IRM from Mary Haas.
Okay, Iron Mountain, friends at Iron Mountain. Okay, this stock is, oh boy, it's kind of funny because you see that it's more closer to oversold than anything else. It's trying to bounce off that oversold condition. But you can also see that it has formed, I'm going to get rid of all the, let me get rid of those. Okay, I'm going to get rid of all the moving averages. And I'm just going to draw my own line in there. And it's not a perfect one, but it looks very much like a head and shoulders pattern, right? You can, or even if you went back further, see this here, right in here. When you do head and shoulders patterns, frequently the neckline is not a flat line. It's just it's either tilting a little bit up or a little bit down. In this case, it's going a little bit up. So I'll put it here. Whoops. See here, we got the neckline here, we got a shoulder, or even this could be considered a shoulder because the armpit came down and touched the line. This one didn't. Clear head, another small shoulder. We break below this neckline and the stock's gonna go a lot lower. That level is right where the recent lows. So we're looking, right in the 42, 43 range. It breaks below that level, it's gonna cause some problems. So I'm very neutral on this stock, but it looks like it's poised for a move. Now, again, I don't want to let's look at the MACD. It's a little bit slow here, sorry. But the MACD is trying to make a positive cross. So let's just wait and see what happens with this thing. If it can make a positive cross, you see the 100-day moving average is the one that's causing some resistance there. So what I'm looking at is the 100-day moving average. That's basically $45, and then I'm looking at the 43-day. So you got a nice. You got very clear signs here. If it breaks above 45, it's going to be, so I'm neutral, but I'm not like a neutral, so let's just forget about it. I'm neutral, but saying, hey, if you can, again, You can't just go 45.01, 45.02. You need a meaningful break. You always get little head fakes, but you get much above 45 or much below 43. I'm going to sit there and say, above that, I'm adding to. If I own it, I'm adding to it. If it drops below 43 in any kind of meaningful way, if I own it, I'm getting out. I'm going to take my profits, or if I have a loss, cutting my losses and getting out and looking for a better time to buy it. Excuse me. So and of course, if I don't own it at all, I'll sit there and say, I'm not going to buy it yet. Yeah, okay, I'll miss a little bit on the upside, but why take the chance? It's okay, because I can put more money into it instead of just making a guess. I can have confidence due to technical analysis that the stock's going to break out when it gets above 45. So I miss a couple of percentage points. Who cares? I'm more confident in my position, and you buy the stock, and you can keep buying it as it goes up. And say that, there's nothing. Don't be ever afraid to buy more of stocks that you have a profit in, because the stock's here, and you buy more at that level. Your average price is down here. You got a built-in profit. Doesn't matter. You're only adding to a profitable stock. The ones you got to be careful about are adding to ones where you have a losing position, because all you're really doing is adding to a losing position. But again, to reiterate, on the technical, the momentum looks like it wants to bounce, but because of that head and shoulders, I want to be careful. I'm going to do nothing right now. I don't own the stock. If it breaks above 45, I'd look to add it and maybe buy some calls. And since I don't own it, I don't, you can go short the stock for those who like to do that. I really don't do that, but maybe look at some puts if it breaks below 43.
Good stuff. And I love that analysis, Matt, where you're very keen on basically like letting stocks come to you, not chasing them when they're making, huge tops. And that's very, very good, because, a lot of retail traders tend to fall into that like emotional side where they look at something that's up 100%. So it looks like a great buy,
Right. And the whole thing is that we have to sit there and say, there's for most of our lives, we've heard people tell us, or we've heard it on TV or in movies, don't just sit there, do something. Well, something, that's good advice a lot of the time. But sometimes the best advice in the stock market is don't just do something, sit there. And especially when it's like people feel I've got to do something. And it's like, especially if they're on a hot run, it's like, well, I'm on a hot run, but boy, I'm on a hot run because I made some really good decisions on some really educated picks. Now I'm just kind of guessing, and then that one works, and I guess again, and suddenly you lose your shirt. Sometimes it's best to just say, I've got to sit back and do nothing right now, and wait till I feel more comfortable and more confident with my pick.
Yeah, it's definitely, I guess what you're trying to say is like find better quality trades instead of just quantity, instead of just trading for trading, actually
right.
have the right setups.
Yeah.
That's great, man. I love the mindset, the mentality. It's definitely something that as a retail trader myself, I did learn, as I was here, going over your picks and all your conference calls, all that stuff. It's very great, because honestly, in retail, we usually retail just kind of moves towards that YOLO, Wall Street bets kind of thing. And being that voice of reason, Matt, I know it's helped a lot of your members. I've literally gotten calls like, can you just tell Matt, thank you for that Viacom trade. I just get calls for that. Okay, let's go to some tick. So
just one thing just to mention is that, and we've had some situations like I mentioned earlier on the Netflix call, and said, shouldn't I be buying this? It's up a lot. And I'm like, actually, if anything, you should be selling it, but definitely don't buy it. It's crazy overbought. And that worked out really well. I saved that person money. And it's just sometimes, again, we want to be making it. That's why so many times in the past, when the retail investor has gotten into the marketplace, they've ridden it all the way up, and they get clobbered on the way down because they're buying every single dip and they're still kind of guessing rather than using some of the analysis that we have. But this time especially, again, I don't want to say this is 1999. It's not 1929. That's when retail investors got involved in 1929, 1973, 1999. They all got clobbered when it was over. Well, I'm not saying it's like that's going to happen. We're going to have those kind of horrible bear markets, but we are at risk of getting hit. And the thing is, we have the opportunities. We didn't have those other 3 times. We have the tools to be able to make money, which individual investors didn't have in those times. And you don't have to go crazy, going short. Where when you're going short, you've got to borrow stock and all. It's all this kind of strange stuff. No, you can buy put options in just a regular options account, and it's much easier to do and much more avenues to take to try to do it, so that not only can we weather any kind of correction, but we can profit from it.
Right. You can own a stock that you love, and you can recognize that there's a correction, and hey, there's no problem in buying put. So you can, make money out of it instead of just sitting there looking at it, just waiting. And that's what I like about your approach, Matt, that you really are on top of the markets. It doesn't matter if it's a bull market or a bear market. I've seen it for years, and the precision of this. I've obviously tied a lot to your 40-year career in Wall Street, trading and being a director in Merrill Lynch, Salomon Brothers, one of the biggest funds out there in the 80s on Wall Street, and as a chief market strategist on Miller Tabak. So, that's quite remarkable. So I guess that has a lot to do. A lot of retail traders, obviously, they're only on the Reddit world. So it's good to see that we're actually bringing them this value, this education that you provide them on it.
Right.
Yeah, go ahead.
No, just any other symbols or whatever. I don't.
Yeah. We got here one that a lot of people have been asking about. We have Tesla.
Tesla. I've never heard. What's the symbol? I've never heard of Tesla. What's that? Obviously, I'm joking. So the Tesla. Now, here's one of my tier 2 picks, and it's doing well, but I thought it might do a little bit better than it has. But it's the key thing here. It's starting to get a little overbought again, so I'm getting a little worried because it can't seem to break above that 800 level. See how many times it's gotten either to it or near it and hasn't been able to break out. And you see the RSI chart. Let me just get this out of the way so it doesn't. You see the RSI chart. It's near overbought, but it's been that way for a long time. It's been kind of gradually moving higher. I just want to look at the weekly. You see, and again, here's a perfect example. Now, usually a stock's getting this high, I'd be getting worried, but no, it's Tesla. Look how far it gets before it really gets overbought. It gets really, really extended, and that hasn't gotten there yet. So that's why I have not said take profits on my tier 2 thing. And let me just go back further. 2020. Good. There we go. So again, the key, of course, you have your stop out level at the 200-day moving average. Again, if it's right now, that 200-day moving average is 703. If it goes to 702.80, that's not enough to get you. See how it dipped below it a couple of times. But if it gets, 2% or more, 2 or 3% below that, then you want to start thinking about taking profits. Most people own this stock at much lower levels. You can take some profits and get out of the name, but the stock, it's holding up very well. And I guess my key point is that they've gained more traction. Believe me, there were times over the years where I thought this company is never going to make it. It obviously has so far. It gets through this correction and continues to hold up as well as it has. I mean, the stock hasn't come down at all. When the market does turn, this one's going to take off. But I just want to look at one other chart here. I'll look at the MACD chart. So I guess my point is, it's not the go-go stock it used to be, but I just love this. It's very mild, but higher low, higher high, higher low, higher high, higher low. That sounds boring, but man, it keeps going higher and moving higher. And again, it's not the go-go stock that's going to go up a gazillion percent in a few days like it did a few years ago. But this one will go very well. When the next, the fact that it's holding up so well in this mild pullback is really good, because usually this stock in the past has been hit every time the market corrects. So this is setting up real well. I'm just a little nervous about the fact that it can't break above 800. It gets above 800, it could be, it should be a real fast trip. Maybe not as fast as we've seen a couple of years ago, but a real fast trip to 900. And so you get above, 810. This is one you want to be in to go along for the ride.
Good stuff. Good stuff. And Jean in the chat, your question: where do I add my address for the delivery of laptop? I just became a member. Number one, welcome to the family. And number two, just send me an email. I'll take care of that. No worries. We'll ship it out to you. So thanks for joining. We also have Jay Norville, Mega Plant, whole bunch of guys here definitely joining the chat room. I can obviously see why. Good stuff. All right. Let's go to another ticker here. All right. This is a ticker that you and I are very familiar, Matt. Last time you and I met here and we did this workshop, we were talking about a firm. It was $108. I was going over the my thesis, right? My fundamental thesis on it. And I was bullish on it because of, the Amazon deal and whatnot, the lending space they're in. And they had a call September 28th. It went well, but today they dropped news that Target is adding them. So we talked about this a while ago, but what are your thoughts overall on a firm, considering, last time we talked about it and today's news, all that stuff?
It's, again, the stock has not been public for very long, so it's hard to look at its chart. It doesn't even have it hasn't been around to even have a 200-day moving average. However, but the thing I want to show you here is not crazy overbought, so that's good. Good news today, but it's getting up there to that 140 level, which was the last time it topped out when it went up here because of meme issues. Now it's moving up for fundamental issues, like you mentioned, for the most recent one, of course, being today with Target. But I do want to look at one thing here, and I was looking at this today because I saw the news and it's good news. But look at this Bollinger Band chart. And again, this getting a little extended. See that? And let me get some of these things out of the way here, so you can see this chart better. But you can see how see how it got above it here, see how it got above it here. That caused a sell-off. The sell-offs didn't last very long. All right. But it's not. It's one that again, the options are probably. This is one you might want to look at a lottery ticket on the puts. And it's like, what are you talking about? This is a great company. They got all this positive new stuff. It's like, so is Nvidia. And guess what? We made 350% on our puts. This stock in the next day or two looks like it wants to come back in. Now, this is good positive news. Unlike here when it was just going up because it was a meme stock. Here, there's real fundamental news, and here was I think this was, I assume one of these. This probably was the Walmart news, but so I don't want to get too aggressive. I really don't want to get too aggressive because they got some good things going for it. And once it breaks above 140, it's really going to go. But it's just telling me with this Bollinger, it's getting more than 2 standard deviations above its 20-day moving average, getting a little extended. And what I'm looking at is if it opens even higher tomorrow, that's going to be when you want to do it. If it opens lower, you have some time to decide. If it opens lower, it's like, okay, maybe I can buy this thing. It's going to chug along. Either way, I think it's going to do nothing for a day or two. That's its best case scenario. I doubt it goes a lot higher. If it does go higher and you get up to that 140 level, 142, I think that's too much for it. And I'm going to buy a few puts as a lottery ticket. Let's see their options. I assume their options are pretty liquid. Their options, yeah. See, they got plenty of volume in these things. Their spreads are a little wide, so you got to be a little careful. But the point is, this is a good company that's getting all sorts of great traction. At the same time, buy now, pay later is not like it's a brand new concept. It's been around a long time. So I guess what I'm saying is that it's okay to buy it. If you own it, stick with it, but don't be afraid to buy a few puts here. Again, small amount. It's like, gee, especially if you already own the stock, you've got a really nice profit. Why not spend $100 or something? Let's say if you've got several $1,000 profit, why not spend $100? You might turn that into another $1,000, and then you can take that money and buy more stock. And I don't want to get too much on that layering thing, but it's something that can work well. And I just, as much as I like the story, and as much as if it breaks 140, it's going to be really positive. That Bollinger Band chart does tell me it got a little extreme today.
Okay, love that analysis. Okay, so we have here another one from the Zoom call. We have CHPT Charge Point by Mr. Ivory Wilson.
Okay, same type of
It's like an EV stock, EV charging, something like that.
Right. Here's a stock that is, boy, it broke above. See how that 20 level was so, again, let me get rid of some of these lines on here. The 100-day and the 50 don't matter that much. Well, maybe we'll keep the 50 up there just in case. That yellow line is the 50-day moving average. The 200-day moving average is the purple line, sorry. It's kind of, you can see how the 50-day moving average has kind of been support. It hasn't got right up to it, but it's gotten close to it several times. But what I really don't like is the fact that 20-day, 4 times, 5 times, 6 times, 7, 8, 9 times, whatever, it held and it finally broken below that line. My concern is it is oversold, so it should bounce here soon. But my concern is that it's just going to go back up to that 20 level and go back down again because that 20 level is so important. So again, that old support is now new resistance. Keep a close eye on it. If it breaks above 20, if you like the stock and you like the story on a fundamental basis, go ahead and buy the stock. You can buy a little bit now and put it, again, no options here that I'm going to look at quite yet. If you want to buy a lottery ticket for and buy some calls, fine, because it is oversold. But you buy some stock here, then you buy more, and you just a little bit, just nibble, get a little piece here, and then have a tight stop. Stop drops 5%, you're out. Move on, because you always want to limit when you're buying a stock, limit it to 5 to 10%. Options you can a little bit more, but individual stock, and then add to it if it breaks above 20. Well, geez, wait a minute, now it's $18, and I add to it at 20. Well, why don't I buy it all right now? Because you're not sure, you're not confident yet. So it'll be a 20, but you have a cost of $19. What do you care? I was like, then you can just put your stop out level at 19 and you can't lose money. Okay, that's your worst case scenario. Then it goes up to 21, or let's say almost 22. Okay, that's its 50-day moving average. It breaks above that. Add some more. So now you bought 18, you bought a 20, you bought a 22. Like, geez, yes, you'll kill yourself. Why didn't I buy it all at 18? Well, everybody says that all the time, and you cannot worry about that. Instead, you'll say to yourself, oh my gosh, I have more stock at $20. Okay, I've added to stock. My cost is $20. I'm really confident it's broken 2 key support resistance levels. It's going to take off now, and I own more than I thought I was going to own because this has worked out so well. And off I go. So this is one. If you like the fundamentals, I think following that strategy is the best way to do it. I know individual institutions add to their positions every day. I mean, the smartest institutions in the world are still buying Apple, and you think they stopped buying it 10 years ago? They got more money in, they love the company, they love the story, they continue to buy it. Don't be afraid to do that yourself.
Good stuff. I love the analysis once again. Okay, and someone's asking if in the chat room you show them how to size correctly when entering a trade, or like risk management, that kind of stuff.
Well, we don't necessarily go into risk management.
They can ask you. Like they can just ask you about it, right? Like if
I mean that's the thing. I mean, I don't necessarily because everybody's got their different risk tolerance, so it's like it would be impossible for you to go, okay, for you ought to buy this amount. This for you ought to buy that amount. That would just obviously would be too hard to do, and I don't know everybody's they're for financial thing, but I just say what I will say is like say the thing like I use the term lottery ticket, or I use the term you can be aggressive here. And what is that? I mean, I think that's a general term for aggressive. For some people, aggressive is $50. For other people, it's $1,000. For some people, maybe $10,000. Maybe even more, depending on how much money they have to trade and to invest. And but so that's the way we tend to do it. Say, this is one we're really confident in. You can be aggressive. And again, for each person, that's a different level of amount of money. Yeah,
for sure.
And then you try to give them a good stop level. It's like if the stop breaks below this level, we don't necessarily give the option level, but again, we like to keep that 20% thing on the options. But if you get stopped out, go ahead and take your losses and move on. You will not bat 1,000. It's okay to take losses. Every great investor who ever lived has had losses. Don't worry about it. But the key is to, like you said, risk management. Get out of those losses and move on. Don't sit there and hope. Hope is not an investment strategy. Don't hope that they will come back.
Okay, all right. And just for clarity here on the chat room, you can ask all these questions directly to Matt once you're a member of the chat room. Everybody obviously is struggling with different things as a trader. Maybe, like Joe could be struggling with not letting his runners win, but Jimmy could be struggling with finding better entries for stocks or doing fundamental research. Everybody's coming from a different place. The good thing is that you're all going to the same destination, which is educated trading, making informed financial decisions, having Matt Maley's feedback on all of your trades. I know you guys have tons of questions we've been going on over here. This is something we do every single day in the chat room. And I'm just going to share my screen really quickly here, Matt, 1 second. I just want to show them the chat room. Okay. I think it's sharing there. We can see it there, right, guys? So you can see it, Matt, right?
I can see it, yes.
So this is the chat room where we're basically all day here. Matt Maley, as you can see, there's charts there talking about tickers. We're talking about a firm. We're talking about the S&P. We're talking about the debt ceiling, 50% retracement rally when the McConnell news hit on the news tape. This is all active news that is happening right now. So the fact that we are able to pretty much consult, pretty much ask, get any sort of feed. You see a firm right there. The fact that we can talk to Matt Maley pretty much throughout the day as the news hits the tape. This is where the value is, because you can go on to Reddit any second and you're going to get all sorts of crazy stuff there, right? Like stocks go up if there's rocket emojis, but here we're doing it different. We're really taking a better approach, which is meant to help you guys as retail traders under the leadership of Matt Maley. It's something that will help you become a more disciplined trader, a more consistent trader, and also being able to become a more diversified trader, because you're going to learn about trading calls and puts for volatility and whatnot, how to hedge your portfolio, that kind of stuff. So the chat room's there. It's active. It's all day. There's no limit. You can, at any point, there's direct messaging and all that stuff included. So I just wanted to share that really quick with you guys. If you want, you can go ahead and share your screen now, Matt, so we can get on to some tickers. I really would like to hear your opinion, Matt, on the whole Evergrande situation, on the default crisis, all that stuff. How does that affect U.S. markets? Does that trickle down? And what are some sectors that you see could benefit or, be impacted by that?
Well, can you see my thing yet? Oh, but I didn't share. Hold on. Can you see it?
Yeah, we can see it now.
Perfect. Okay, just to answer your question. Here's again. I put this the last chart we're talking about. This goes back to that 50-day moving average. See, it was key resistance. When it finally broke it took off. Okay, and then really, it broke it. Well, it's good. Key resistance again. When it breaks it, it's going to see another big run. So that's why I really like that one. Anyway, going back to your question, and I think this is maybe the most important question in the marketplace right now. And it's not out of Washington, D.C. It's what's going on in China. And Evergrande, it's not. It was not a Lehman moment. We're not in 2008 all over again. That's the good news. The bad news is that as part of this de-risking and deleveraging policy that China's been going over for a year now. It was started, maybe it was not good, 11 months ago when Jack Ma was Alibaba, and they pulled, basically Jack Ma disappeared. Like, what the heck happened to him? He was out criticizing the Chinese government and the banking regulators, and suddenly he disappears. And they start cracking down with all sorts of regulations on Alibaba. Well, luckily we've found that he's alive, and I guess he's fine. But everybody thought, okay, this is no big deal. They're just like, Jack Ma got too big for his britches, so we're gonna cut him down to size and let him know who's in charge. So nobody cared about it. Well, then suddenly we got into the new year, and they started doing new things on other technology companies and retail, retailing and things like that. So internet retailing. So. And then suddenly it moved to more more technology stocks, and then it moved to the education stocks. They basically nationalized the thing. And then gaming, you couldn't go, gaming. And forget, when I talk about gaming, I was talking about casinos. but they also gaming for video gaming. Kids can only, how many hours? They can only limit a certain amount of hours a day. This was a booming industry for everybody saying, oh my God, there's billions of kids in China. We're going to sell them video games. We're going to make a fortune. Well, guess what? They're not. And because they've decided to decentralize, okay? Part of that, deleverage and de-risk their markets. They're not decentralized at all. I meant the wrong word there. But anyway, but what they're doing, and same thing is here on this real estate. Real estate is a massive part of their economy. They know if they have a bubble that bursts, they are going to be in big trouble, and so they're trying to let the gas out, or letting the air out of the bubble slowly. And they're letting, so when Evergrande was like, okay, the stocks, their bonds are trading at 80 cents on the dollar. But don't worry, they always buy them out. They'll always make sure. Then it went to 70 cents. Like, don't worry, 50 cents. All of a sudden it got to 30 cents and everybody's like going, uh-oh, they're serious. They really are going to let these guys, they're not going to let them default, but those who invested in it are not going to get 100 cents on their dollar. They're not going to get 50 cents on their dollar. They're not going to get close to 50 cents on their dollar. This is de-risking. This is what suddenly people are going to have to have all these investments out that are leveraged. They're going to have to sell things to deleverage themselves. And that's what China wants them to do. And you have this at a time when we've been the market, part of the market, not all the market, but a decent part of the market, not most of it, but part of the market in the US has been pushed by the liquidity provided by the Federal Reserve and the Fed. So when you got the second world's largest economy, de-risking and deleveraging. In fact, what was the name? I think it was called Fantasia. I wrote it down here. I was not familiar with the company. I wrote it down here this morning because it's so important. But it was one of the very big real estate companies in China. And they have defaulted. Fantasia Holdings. They defaulted on their bonds. They had bonds that were due on Monday, $205 million that matured. They did not pay their thing. Sorry, I'm moving around here, but I'm about to lose my battery, so I'm going to plug in my
we
charge.
need you here, Matt.
So anyway, and so I was like, well, wait a minute. I thought they were. Well, they're not going to let Evergrande. They're going to really let their investors get hurt, but they're not going to default. Well, again, Fantasia is not as big as Evergrande, but they're big and they're defaulting. And it just shows what they're willing to do here. And when you have the second biggest economy deleveraging and de-risking their economy and their markets, it eventually has to spill over into our markets, especially when we have a Federal Reserve that's about to taper and a European Central Bank, which is about to do the same thing. Again, they're still going to have providing liquidity. This is not a situation where liquidity is going to disappear overnight and the market's going to crash. But it's something that I think this Evergrande thing is important, not because it's a major catastrophe. I hate to say it too. Lehman moments don't come at the beginning of crisis; they come at the end. So if there is a Lehman moment, it's going to be some other company a year from now. And I hate to say it, but in 2008, that's what happened. Bear Stearns. It wasn't Bear Stearns who went under first. They went. It was their hedge funds in the summer of 2007. That was the warning signal. Their hedge funds went belly up. Then 6 months later, Bear Stearns went under. They went belly up. And 8 months after that, or 6 or 8 months after that, Lehman went under. The Lehman moment came towards the end of the crisis, not the beginning. And so this is a warning shot. The good news is I don't think it's going to be any kind of the same kind of crisis that we saw 12 years ago. But it's something that just shows us that the market's expensive. It's a reason it's expensive. And the main reason why it went further than it probably should have is because of all this excess liquidity. We're going to have less liquidity, less stimulus, that things have to come back down. That's normal, that's healthy, that's good over the long. Now, Mary Erdos, I talked about with JP Morgan, she's talking about this is good for investors. And I totally agree. We'll go back more to fundamentals. But why just sit there and wait for it to happen when we can try to profit from this de-risking process along the way?
Yeah, absolutely. Stocks will eventually hit a fundamental value, right? They will eventually kind of cool down, just like every other stock. That's great. That's great. All right. Let's see, Matt. Do we do some tickers here? Do you want to talk a little bit? I know there's a lot in the markets. I know you scan the markets, like global markets. Are there any other issues in the market that you see that could be that investors and traders would benefit from keeping an eye on, or things we need to look out for? at this moment with everything happening right now, the debt ceiling. There's a lot of stuff going on in the market right now, Matt, and people don't, especially retail, don't know really how to make sense of all of it, because one thing affects the other and the other thing affects the other and so forth.
Well, one of the things we talk about this debt ceiling thing, again, everybody feels that it's not going to be a problem. And, there was, President Biden was today saying, if this happens, it's going to cause serious problems. He's absolutely right. But there's a pretty, the chances of it actually happening, of the U.S. defaulting on its debt, very, very, very low, because it's not like they'll be forced to default on the debt. They'll commit suicide, I guess is the way to put it, instead of being killed. And the thing is, you don't, so that's unlikely to happen. But it makes headlines. That's what people talk about, because it's Washington, D.C., and people can understand it, and people love bashing politicians. But, so the individuals, that's what they hear. But that's not the important issue, because that's not why the market's been getting hit. It's been other issues. And, I talked about this de-risking that's happening in China. Well, guess who's that hurting? Well, look at South Korea. Look at South Korea's stock market. This is the KOSPI index. This is South Korea's stock index. Okay, look at how that's breaking down. Okay, now it's getting very oversold, so it looks like it wants to bounce. But see, that was in a tight sideways range for a long, long time. It finally looked like, it looks a little scary here. It looked like it might break down below that sideways range. It tried to break out, but then it rolled down. And now it's broken down below. It looked like the 200-day moving average provided some support, but now it's breaking down. It broke below the 200-day moving average, broke below the bottom end of the sideways range it's been in. It's probably due for a bounce near term, but this is something that concerns me, because they are very dependent on China. Their economy is very dependent on China. So their stock market's getting hit, and stock markets tend to move before their underlying economy. Japan's Nikkei index, sorry here. Oh, no wonder I'm putting on index. Sorry about that. And here's Japan's Nikkei index. Look how it's rolled back over. Again, I want to get some of this stuff off the chart. Here's another one that looks like it's getting oversold. So I don't want to, so it looks like it might be a near-term bounce. But see how this is changing? It made a double top, and now it's testing these lows from back in August. It looks like it's going to bounce a little bit near term because it's getting oversold on its RSI chart. But if this breaks down from here, makes a lower low, that's going to be signaling that Japan's economy is starting to slow. So some of these economies or stock markets that are really, very, say, dependent on China's growth for their growth, are starting to roll over. They're signaling their economy is going to start to grow. And as that filters through the rest of the world, it's got to have some problems. So that's what I'm looking at. I'm looking at some of these, we all know that Hong Kong has come down. That's a little different reasons for that. And of course, China's stock market hasn't come down as much, but they can keep buying their own stock market to keep it from going down. But for those countries that have democracies, that's a lot harder to do. And their stock markets are showing that China is having an effect. These new policies that China is following is having an effect on their economies. And so that's just another thing to keep an eye on. And we can talk about the dollar. We can talk about a lot of other things.
I did want to actually ask you something related to that with the spending package right now, the increasing, it's related, the packages and the debt ceiling, it's like almost hand in hand. So you see that happening, and you look at rates, you look at the tapering side of things. Seems like a whole bunch of mumbo jumbo. How can you make it simple? How can you simplify what's going on with the situation, what your thoughts are with the dollar, with bonds, with yields, and how that impacts the stock market ultimately?
Well, the dollar, with these big major deficits that we're running, makes it very hard for the dollar to rally on a long-term basis. And however, you can see, so on a fundamental basis, I'm a long-term bear, but right now, and I have been bullish on it since March, and sure enough, it has rallied. And one of the key reasons, well, again, the technical basis, it made a double bottom here, so that's good. Now it's made a higher low and a higher high, so it looks like it wants to go higher. I mean, what a nice base here. This is a nice base, a double bottom base, higher high. It looks like it's going to higher. Why is it going higher? Because of flight to quality. People are looking at, well, two things: flight to quality, because they see the market to be a little shaky, so they're worried there. Number one. Number two, China's economy looks like it's slowing, and that, again, they're engaged. This does not get enough attention. People are just talking about Evergrande. I'm talking about, but talk about what caused Evergrande. What caused Evergrande is their de-risking and deleveraging policy. They're trying to slow things down. This is not just to bash their rich people and get them back in line. This is a way to keep them from having a kind of bubble they can't recover from. And so if China's going to slow down, where are you going to go? You're going to go to the dollar. Europe looked like it was going to do better, but when it's the second biggest one, biggest economy is starting to slow, where are you going to put your money? Into the biggest, the currency of the biggest economy. That's why the dollar is going to continue to go higher on a fundamental basis. Why it will eventually roll back over on a longer term basis is because of this budget deficit that is just getting crazy. Now, talking about interest rates, as the dollar moves higher, that also helps interest rates move higher. But again, let's look at what's happened here. I'm going to go back a little bit further. This is the yield on the 10-year note, not the price, but the yield, okay? And we don't even need, well, I'm going to get rid of all the moving averages and stuff. But look at this. This is one of the reasons why I called for a correction in the stock market. We had been seeing long-term interest rates go down, 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 down. They raised a little bit down, 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 down. Then they flattened out in the summer of 2020. This is the whole pandemic, everything else. The dollar got crushed, but it flattened out nicely. It's formed a very, very nice base. Well, as we got into here, and again, it's you can't see it as well, but here we made a higher high. As we moved in here and we made a higher high in the end of August. And I was saying, we formed a nice base, made a higher high, the dollar's going high, a change in trend is taking place. Then I doubled down on that when the yield on the long bond. Well, there's another reason. I'll tell you another reason why. Okay. Another reason why I turned here is that sentiment and positioning, the futures traders were so long the bond market. In other words, they were long bond prices. They owned bonds up the wazoo, expecting bond prices to go up and yields to go down further. There was nobody left to buy. So you had technically making a nice base, a higher high. Positioning was there was nobody left to buy. And so I was pounding the table saying rates are going higher. That's going to help bank stocks. But here, and then I doubled down on that call when in November we broke above the trend line going all the way back to 2018. And sure enough, yields continue to climb higher. Here, they got very overbought. Okay, so we said, oh, it's going to take a breather. Sure enough, they came down for several months. But now they're starting to do the same thing they did last year. So we'll zoom in on that. And sure enough, we made a nice little double bottom there at the 1.3 level, and we broke above the, it broke above the trend line. We made a higher high above these highs, made a higher high. This is a clear breakout, a clear change in trend. Interest rates are headed higher on a technical basis. Why are they headed higher on a long-term basis? I'm sorry, on a fundamental basis, because inflation is taking off, and it's not going to be transitory. I mean, these problems at these ports. In the old days, they would bring these boats would come in, and they would just dump off the cargo crates, put them right on the trucks, and off they go. But the prices are so high, they want to make this money. The shipping companies are saying, no. You're not taking our containers. You're going to unload all those products out of our containers, put the container back on our ship, then we're going to leave. Then you're going to have to. So it's not just a case of we need more workers at the docks or working 24 hours. They have to work twice as much because they can't just take the container, put it on a truck, and let it go. They have to take all the stuff out of the container, put it in a new container, and then let it go. It's a lot more work. It's not going to turn around anytime soon. And it's not just oil prices. It's prices of everything that's going higher. The bottleneck's going to stay with us. And that, prices going to remain high. That means inflation is going to stay with us. I'm not saying that interest rates are going to take off and go to 5% or anything like that, but they're going to stay elevated. And and like I said, last year, interest rates moved higher. That caused a correction in the stock market. I think this one's going to cause the same. sorry to drone on that, but I do think this. I think we're kind of focusing on the wrong things. We're focusing on Washington D.C., or we should be focusing on China, and we're focusing too much on what kind of earnings growth we're going to have, when we should be focusing on inflation, because that's going to have cost some headwinds for earnings. And again, I don't want to say I'm not a perma bear by any stretch of the imagination. In March 2020, when the market was flat on its back, I was saying buy the market. It's washed out. The Fed's jumping on board. Let's go along for the ride.
Yeah, absolutely. Absolutely. And Leslie's just asking a quick question there about how does a stock only trader should manage risk using Matt's methodology or stock picks, like how to apply the chat room content to stocks in practice. Like, so maybe that would be something like where you ask Matt, it's what we've been doing today all day. You ask Matt about picks, about strategies, you get his feedback, right? You're getting feedback and strategies from a chief market strategist, from a 40-year-old Wall Street veteran who's been in the game in and out. So that's ongoing in the chat room. If you want to talk about like short-term options, that kind of stuff, we're talking about that as well. Basic calls and puts, nothing crazy, right? There's several purposes for this, but I think that would be maybe a good way. Do you know how else maybe people could put this in practice, Matt?
Yeah, well, one of the things I like to do when we talk about these stocks, when we see things breaking out or we see something getting incredibly oversold, is you use stop levels. And you can literally put the order in where I say if the stock gets to this level, it will automatically be sold. So you can limit your losses. So that's one of the, risk management. That's very, very important. My rule of thumb is never lose more than 10% on just a regular stock trade. Once it's down 10%, get out. Again, if you really love it long term and it's down 10.2%, you could go a little bit longer, but especially if the stock's getting oversold. But you really, and I don't even like to get it to 10%. I like to see when it gets down to 7 or 8%. It doesn't mean that it's a bad idea. It just doesn't mean it's working yet. But, it's like I said, the market's is not right. It's not always right. The market is always right eventually. And so that will work out eventually. Don't be afraid that if you lost 6, 7% on it, this isn't working, I'm getting out. And then, but keep an eye on it. It's like, okay, now it's come down a lot. It's even cheaper now. Look at the technical backdrop. Boy, it really oversold now. Okay, I'm going to go ahead and, even though I lost money in it 2 months ago or 6 months ago, I'm going to go back on it now because this now it's going to work because it's a good fundamental play. And you go back in and then again have it down those times. So risk management using those stops, what they call the stop loss order. Now, one thing I do want to say though is if once you start getting really good profits, then you raise your stop limit. I mean, let's say if you're up 10%, 15% in a stock, especially even more, raise your stop level to your cost. Again, that'll guarantee that you don't lose anything. And today, when you're trading stocks and you don't have to pay a commission, your worst case scenario is you don't lose any money. Okay, and and then as the stock continues to rally, move your stop loss, but don't move it to 10. Don't always keep it 10% below. Okay. If you've got a great story, especially if this market gets washed out and you got a great stock and this thing just takes off and it's up 70%, it's like, well, it's up 70% because now it's overbought. It's going to go down 15, 20%. That's okay. That's normal because it's had this huge run. And you don't want to get stopped out because you still have a huge profit. So you move your stop level to a certain level so you guarantee a profit. Now you don't just want to guarantee not losing money, you want to guarantee a profit. But you can afford to lose a very small, again, the stock may fall 15%, but you still love the stock and you're still up 70%. You're just not up 90% anymore. It's okay. You can have a little bit more room to let it go, but you still want to have a stop so you guarantee that you don't lose your shirt. It's nothing worse than, that's a problem. And what happens is that people are like, geez, I doubled my money and it just kept going down. I said, oh, in the next bounce, I'll sell it. And then they never do. And they end up losing money. There's nothing worse than losing money on a big winner. So have that stop loss order. Don't be afraid. It's like, I knew I thought about selling it at $80 now, but I own it at 20. It went to 80. I thought about selling it. Went to 70. I said, if it gets back to 80, I'll sell it. No, it's at 70. Get out, move on, buy it back again when it drops to 50 and gets cheaper, etc. So those are the types of things we talk about on the chat room where you can talk about those risk management issues because human nature is so many times gets us to do the wrong things. And it's one of the reasons why I'm saying right now where people should raise a little bit of cash. The market's only down 5%, not even at 5% after these bounce. You have, again, not saying, oh, you'll sell everything. Go to 100% cash or even go to 25% cash. But you've got a little bit of cash on your sidelines, you'll be able to take advantage of a dip. But more importantly, psychologically, it's going to help you in such a major way. Because if you have no cash, you have 100% in the market, and the stock market's down 20%, down 15, 20%, and you're like, I knew I should have sold some stock. I knew I should have done it. And you end up selling right at the worst time. Just as the market's getting washed out, you're selling it because it's human nature. That's just what, it's nothing wrong with you. That you're not stupid. You're not a fool. Everybody's done it. I've certainly done it. Is you kind of get panicked out of the stock and you sell at the exact wrong time. If you have some cash on the sidelines, you may not get that exact bottom. You may actually wait. And it's like, I want to wait until, okay. And it goes down 20% and you wait until it's up 5% off those lows. You still have it 15% lower than where it was, right? And you have that confidence. But you're able to do it because you're not panicking. It's like, I'm not worried. I still got some cash. Okay. And if I got to buy some groceries, I'll use that. I mean, and you don't get shaken out because again, the market goes up over the long term, and raising a little cash has more to do with more than just buying things on weakness. It helps you to keep you, as the old saying goes, keep your head while others around you are losing theirs.
That's great. And that's definitely something we need as retail traders. I know a lot of retail traders follow you, Matt, because of that, because of your discipline, your consistency to following the rules and all that. We have a question here from Mr. Daniel Diaz. He'd like to know about Dow Inc. I'm assuming that's the DOW.
Dow Chemical, yeah.
Is that, yeah, I think that Dow Inc. That's what mentioned there.
There you go. Hold on. Huh. My screen seems to be, oh, there it goes. Okay, hold on. There we go.
Yeah, just for you guys to know, Matt Maley's using a Bloomberg terminal, which is what equity firms and hedge funds use to do their research and all that.
Okay, Dow Chemical. Let's go back a little bit because we always like to look at further back. All right, this one's not looking so great. It's now, it's had a little bit of a bounce. That's nice. And I'm going to go back. Oh, I forgot they changed because they went, they combined with DuPont. But anyway, see this? That's what's called a death cross. 50-day moving average crosses below the 200-day moving average. Look how much further the stock dropped after that took place. Well, guess what? It just saw a death cross. It's actually not an official death cross because both moving averages need to be falling and this one was rising, but that's not the real thing that concerns me. Those death crosses and that's right, there's death crosses and golden crosses when the exact opposite happens. They're not the best indicators in the world, and most technicians don't follow them very closely. But they are good when you can go back into history and see how well they've worked. In this case, we don't have a lot of examples, but it was negative last time. But look at this here. Again, no question, it's crossed well below its trend line going back to the lows, the pandemic lows. We're below that trend line. We've making higher, that actually slight higher highs. So I look at, maybe we have some trend, got cracked. But it got above its 2-day moving average, but now it's broken back below it. It's done in a meaningful way. It tried to get back up to the 200-day, didn't make it. Looks like it's making, so it made a lower low. Looks like it's making a lower high now. It's starting to roll back over again. It's no longer oversold. The only reason why it bounced was because it was oversold, not because it was a great value. It's a chemical company. If commodity prices are going up, that's going to hurt their margins. So on a technical base, on a fundamental basis, that's tough. You could also call this, boy, this is really rough. Again, it doesn't mean it's a bad company. It just means it's got some tough. See that? That's kind of, well, if you go back, I should go back to here. Hold on. The neckline of a head and shoulders pattern. Right here, head, neck, shoulder, head, shoulder. It breaks below this, makes another lower low. It's going to break that. This stock is, again, with the fact that commodity prices are probably headed higher, they'll bounce around. And natural gas is way overbought near term. It should come down. But you got to be careful with this one. If it breaks back above its 200-day moving average, which is way up at $62, you know, you definitely get some relief. But right now, this is not one I want to own. And it's just both fundamentally and technically, it's just it's having a tough time. That happens sometimes. Doesn't mean it's a bad company. Just means it's having a tough time.
Right, right. And I see an interesting one here. I'm actually really, I mean, it's a really good stock, but it got hit by a couple of weird things, and you probably might be the best person to explain it. FedEx, the recent thing with FedEx.
Okay, now look at this one. Market, like I said, there is a death cross. Let's go back on this one. It's a death cross, but look how oversold it was. Look how oversold it is. Wow. Now I'm going to get rid of the 100-day. Okay. The last time it had a death cross, it actually went up for a while. So this is not a good one to tell you. It got a golden cross there and did nothing. So we don't care about the golden crosses and death crosses in this stock. So boom, that's out of the window. The fact that it's rolled, it's 200-day moving average rolled over. It has definitely made a key lower low. That's not good. But look how oversold this thing was at its lows, just recent lows. I'm going to have to go back that far. Oops. Actually, you know what I'm going to do? I'm going to look at its weekly chart too.
Yeah, I remember when you were talking about UPS in the chat room,
right.
And I bought some puts on it, and it was on that dip actually when you brought it up. Yeah.
Now here we are right now. Look how oversold it is on its weekly RSI. This is weekly RSI chart. The longer you go, the more compelling the chart. So the weekly is more compelling. It's not as oversold. You can't say it's ever, but it's still very oversold, and it's coming right down to its 200-week moving average. Look how it bounced off that weekly moving average there. Here, it broke below it. Old support became new resistance. It couldn't break above it. Look what happened. It spent the next 2 years going lower. But look what happened when it broke above it. Straight up. Okay? Look what happened the last two times it got this oversold. It bounced nicely. So my guess is that it's not going to break through it like it did. Well, it could see it. I just don't see it. I mean, if the market gets cracked, I mean, but boy, this is the one thing you look at. What are the stocks that are going to be really good to buy if and when the market gets washed out later this month or early November? This is going to be a great stock. This is one, because it's very oversold and because it's very near its 200-day moving average, this is one I like to nibble on. You buy the stock a little bit here. Don't take a full position. It's okay if you have to pay higher later, but if it breaks down in a washout move like it had back at 2018, this was the big correction in when the Fed was tightening. If that happens again, boy, this is going to be a great one. Now, what is the stock? What is the stock going to do? What are some stocks going to do? You think, well, I'm going to buy Apple. I'm going to buy, but they're not going to go down as much. Okay, that's 30% in a quarter, in 3 months. Boy, that's a nice return. And then see what you do there is you buy some stock, and all of a sudden, I'm going to double down. I'm going to buy some call options once the thing really gets washed out. Suddenly, you've done very well. But this should be on everybody's radar screen for to look at if and when the market gets washed out. That's one you want to own. Do you want to short it here? I definitely don't want to short it here. Could it go lower? Yes, but it's very, very oversold. And I don't want to play with that. And you talked about UPS and how that one worked out really well for us.
Yeah, that was from the chat. That was several months ago.
But look at this now. That's the other thing here. Look at these stocks. Let's go back. 2018. Bang. These are the two stocks. UPS, okay. Look what happened, okay, when they got far apart from each other. Look what happened to the stock rally. This stock is too far away from, let's go from the beginning. Let's go from the pandemic low. So we'll go 0323, 2020. Okay. No, that's not bad. Let's go. Yeah, that's kind of lopsided there in both directions. So, but you see how FDX, it got ahead of it, but it's back below it. It's just it's got to play catch up to UPS. So there's two reasons to like it. These guys are in the same business. Is there really that much difference between these two businesses? Really? Maybe I'm wrong, but I don't think so. So it played catch up here, didn't completely catch up, but it played catch up here. Looks like it's getting poised. See when it underperformed right in this downturn? It's doing the same thing here. It's got to play catch. Now they may both go down again. If the market washes out, they may both go down. And this Christmas season is going to be interesting because, they're going to be able to charge more, but if they don't have any packages to send, they're not going to make any money. So it's a dicey time. It's one where I would want to be nibbling and wait for that washout trade, especially if we get a bad Christmas season. It'll come back, believe me. They're too big to UPS and FedEx are too big to fail. They're not going to fail anyway. Nobody's worrying about them failing. And Amazon, they can scare them all they want, but they need them. This is going to be one that people want to buy. Again, nibble a little bit here, but have it as one that for a long-term play. That's on your long-term play at some point between now and the end of the year, and certainly now and through January of next year, it's going to present a great opportunity.
Yeah, and I remember seeing in the news that FedEx was increasing their prices to adjust for inflation, which is kind of creates more drama to the whole inflation thing when companies, it's like the inflation, the real inflation, and then companies preparing for inflation. So
right, yeah.
Okay. So guys, we're gonna keep the FDX. This is gonna be a chat this is gonna be a ticker that, well, there's a lot of already new members here, by the way, so I don't want to be rude. All the new members that joined here, welcome to the family here with Mr. Maley. Welcome to the crew. We trade together like a team, no trader left behind. We will be following up with the FedEx trade in the chat room, right? There's obviously a ton of other trades there that we're looking at on a daily basis, but this is one that definitely the chat members will benefit from Matt being able to give them the insight, the timing and all that stuff. So, quick question here. 80, how much is okay? Adi, I'm going to paste the link here so you can get in there. But Matt, I know you're a very busy guy. So how's your schedule looking? I know people are happy here.
It's 7:30, so maybe if we wrap it up by 7:30 in about 10 minutes, that'd be great.
Okay, so let's do this. Let's keep the ball rolling here, and then at 7:30, once you take off there, I'll stay here for a couple minutes answering questions about the chat room and that stuff. And in the meantime, we can let the party go right now. So what are we doing now, Matt? Do you want to give remarks of the market? There's some tickers here in Zoom. I'm not sure if you can see them there.
I do not see them. So why don't you give me one or two more tickers, and I'm sure that'll lead to a comment.
All right. Let's go with Neo. Everybody's asking about Neo here. I got you, KK.
Okay. We've talked about this one before. It's so much potential for this company. Let's see here. Okay, it's weekly. My concern is that that's probably may have to get down and retest near those 30 levels, down of the May lows. It made a lower high here. I love that did not make a lower low. So it's like, okay, that's good. But it didn't make a higher high. It didn't follow that with a higher high. Technically it made a slightly lower low, but that's considered a successful retest right there. I'll get rid of the 50-day moving averages there. But I see this was a weekly chart, and it's been kind of doing nothing in the sideways on a daily chart. It's not crazy oversold. It looks like it's going to probably have to get back down and just get close to that 30 level, just like it did in May and in March before it really bounces. And even you can see this, if it takes it below its trend line, going back to last year, that's again negative. It's not a disaster. But it's, you should see that. That's not great. I'll go back to the daily chart. Oops. Let's just go. You can see it's kind of just an, you know, tried to make a higher high, didn't really get there. It's kind of, you know, it's kind of dead money right now. And I'd rather, I'm not going to wait for it to go and break out. I think what we wait for is get more washed out, get down to that RSI down would be both. If it gets down to the RSI gets down to 30, that should be a buy signal, and which would also correspond to the stock getting to $30, which is a coincidence, but that could be there. The other thing, and I'm surprised nobody's asked about, which is obviously, if you don't mind, I'll just interject here on a different issue. But it says something that has not been asked. It says something maybe about the asset class, but Bitcoin. Here we are with Bitcoin. It's getting overbought near term, but you know, it's funny because this recent pullback concerned me, and I was like, geez, if this thing breaks $40,000, it's going to be really bad. Well, really, really bad, quite negative. The reason for it, number one, China, on a fundamental basis, China came out and said it's illegal to transact in Bitcoin and in cryptocurrencies, including Bitcoin. That was like, oh, okay, that's not good. And then we had Gary Gensler, who's the head of the SEC, saying that we're going to have more regulation. And you know, so when the asset was trading down here, let me get these again. Sorry to have so many. They automatically come up all these different moving averages. What I'm normal seeing, but I'm sure make the clutter the picture up for those who don't look at charts as often as I do. But so the 50-day moving average is not particularly. I'm sorry, the 100-day moving average is not particularly a key line. It's, you know, it hasn't bounced off it, or, you know, it hasn't done much around it. It's kind of gone through it in both directions without much issue. The thing is, it's getting a little overbought, but look at this. It was overbought for, you know, an entire month and kept rising. But this was the key. We know now this is the key support level, 40,000. If it breaks below 40,000, we need to be careful. Gary Gensler, when you have the combination, the thing is though, the combination of Gary Gensler's threats about regulation, China making it illegal, the fact that it did not break below 40,000, that's bullish. Here we are. We were in this trend channel for 3 months, sideways channel, or say channel, sideways range. And finally, when we broke out of it, it took off. It came back down. That old resistance level became support. It held rock solid hold, held that key support level, made a higher high. This is very bullish. It's getting a little overbought and you need to pull back a little bit near term. But I got to tell you, 3 weeks ago, I was very nervous about Bitcoin and the cryptocurrencies. This technical action is certainly made me, again, I didn't turn bearish on it. I was just saying, you know, I love it long term. I even love it intermediate term, but short term, you need to be really, really careful. That turned out to be wrong. I don't pretend to be right every time. And it did not break that 40,000, so I did not turn bearish, but I was just saying, you know, be very careful about buying it here. So we missed a good buying opportunity on that one. But keep an eye on that going forward. Of course, if it can break above its old highs, that's going to be very, very bullish. The one thing that does keep me, again, I'm a little worried about is that I do believe that it rallied more than it otherwise would have if it hadn't been for the outsized stimulus that was provided by the Fed. They're going to be cutting back on some of that stimulus. So it's, you know, the trajectory of the rally won't be as strong as it was from March of 2020 until you know, over the next year until, you know, April, May of this year. But it's still, I'm still bullish on it. And again, this is the kind of real bullish action that really has got to make the long-term bulls really give them more confidence that that the news that came out last month is not going to be something that slams Bitcoin or the cryptocurrency market.
Okay, all right, definitely love that insight. I know we were talking about Bitcoin last time we met here for the workshop. All right, let's get one last ticker here. Microsoft.
Yeah, well, here's a great company. I mean, this is a company. It's so funny how people forget certain things. Microsoft was the premier company during one of the 2 or 3 premier companies during the dot-com bubble. And then when the bubble burst, every stock went down. Amazon went down 90%. You believe that? Went down 90%. And Apple, they all went down. And of course, Apple and Amazon and so many other companies, some of the really high quality companies, rallied back in a major, major way. Microsoft didn't. It was dead money for a long time. People kind of forget that, and younger people don't even know that. That, you know, in the 2000s, we used to call them the aughts. They had from 2000 to 2010, or until the end of the crisis. It didn't do much at all. It was not a good stock. Well, now it's back into what they've done, getting into the cloud and stuff. This stock is back into, again, it's not the dominant, one of the 2 or 3 most dominant, because there's just more dominant tech companies now. We have more, but it's right there at the, you know, in the top 5, top 10 names out there. But what we'll look at here is the 100-day moving average. We looked at that. Look at this. Look how many times. Got a little bit low, it bounced. Touched it, bounce, bounce, bounce. Got close to it, bounce. Got right to it, bounce. Got right to it, bounce. Got right to it. Now it's bouncing again. Not oversold. This stock, the one thing I worry again is if the broad market sees it more of a pullback, we might finally break that 100-day moving average. If and when it does, you want to step aside. You want to let that. If you own the stock, stay with it. You can even, if you want to add to it here because it is holding that level. Be a little careful here. If it, again, if it continues to rally here, the market holds up through the end of the month, this is still going to be a great name. If my point is, the 100-day moving average is going to be broken at some point. Maybe it's 3 years from now. I don't know. But chances are it could finally happen this time, but the rest of the market gets hit. When we get washed out, you like Federal Express, you ought to be buying this stock with both hands. If it breaks below the 100-day in a meaningful way, you can again play up lottery ticket because it's and buy a few puts. But again, you don't want to be short this stock. It's too good a company. But again, it's not cheap anymore. It's not cheap stock, and it's not crazy expensive either. But we want to, I'm kind of talking out of both sides of my mouth. But the point is, we can go back further. How long has that 200-day moving average been good? Basically, since a month after the bottom of it has been that rock solid support. So when it breaks it, it's going to be negative. But you want to be this market gets washed out in the next month or so. I guess market goes down 10 or 15%. This is a company that's going to regain that 100-day moving average very, very quickly. And that's assuming it even breaks below it. So my point is, you own it, stay with it. If you don't own it, you can buy a little bit here. Again, my concerns over the overall stock market tell me that I don't want to be too aggressive. But if we break to new highs above this, about 305 level, we break above 305. That'll tell you that the coast is clear, and you can even again say, well, why would I buy it at 305 if I could have bought it at 291? You just have more confidence, and given the headwinds that I think the overall market is facing right now, it's hard for me to get overly aggressive, even though it held is 100-day moving average again. But that's really it on that one. It's a great company, great long-term holding, and that's really it.
Okay. So, well, before anything here, definitely want to thank you, Matt, for sharing your time with us, with your members, because you have a lot of members here that are viewing you. Also, for the new people that just joined, thank you for being here with us. We're going to move on to the Q&A in a bit. Just want to give Matt some closing remarks here, if you have something to say to your new members and current members and all that sort.
Well, yes. Well, first of all, thanks so much for joining us or being a member already. The point is, there's nothing wrong with what these Reddit traders and things do. That's fast money stuff. But at some point, that's going to blow up. And what I want to try to do is help people not just, hey, buy this, buy that, buy this because of this. So you'll learn. So you can, you do this yourself, and you can give each other ideas in the chat room. That's one thing that's really great about it. We all learn. Believe me, I've learned things from others who haven't been in the business, who haven't been doing this for very long. But today you've shown me several stocks that I suddenly am looking at very closely that I wasn't looking at before this call started. So I'm always learning. But the point is, I do believe we're at a bit of a crossroads in the marketplace. on a short-term basis that we'll be able to take advantage of. And I really, it's just all too often, too many people. And again, it's human nature. I don't blame people, but it's like once the momentum, it's like our favorite team. It's like they win. It's like, well, they'll always win, right? Well, what happened? Well, things change. They got different players and such, and nothing. It's human nature to assume. And the same thing happens on the negative side. It's like, well, we'll never win. Well, the Boston Red Sox never won forever. Now they seem to win all the time. Patriots were the worst football team in the history. Well, one of the worst football teams in the history of football. And in the last 20 years, now they're the best. So the thing is, for so long, we can only take advantage of one side of that trade as individual traders. Now we have the tools to take advantage of the other side when that happens and profit there. And again, the whole idea is to maximize your profits. And I don't promise I'm going to make you $5 million by Christmas. What we're trying to do things responsibly and also help you learn, so that when you do it, whether you do it on your own or even you do it within the chat room or within these newsletters, that you have the confidence to and again, you can say I'm being careful here, but now I have a true reason why I'm doing it, and therefore I have more confidence to put a little bit more money into it. Plus, I have a stop level so that if I'm wrong, which I will be sometimes, I can limit my losses and live to fight another day. So that's what we're trying to accomplish here with Benzinga, with Rodrigo and the rest of the team. And it's a great business. I'm very, very passionate about it, and been doing it a long time. And you can see I haven't lost any of my passion. And I think this is a really exciting time to be in the marketplace, and will be for many years, again, because of all these tools that individual investors can use today that they never could in the past, in both directions.
That's great. Thank you so much, Matt. I appreciate you here. And till the next time we meet, Matt, here with the members. And I know you do in the chat room every day, so those guys see you every day, hear about you every day. Okay. Well, yeah, appreciate you, Matt. Feel free to hop off here. I'll just go over a couple questions.
Thanks, Rodrigo. Thanks a lot.
Appreciate you, man. Thank you. All right, guys. All right. I'm going to be sharing here the chat room with you in a bit. Just going to give you guys a sneak peek of what's going on there. Okay, so I think you guys can see that. You can see the chat room there. That was from today, obviously, but behind what you see on the chat room, very important to know, guys. Just want to give a shout out to all the developers, coders that have been working hard on giving you guys these tools, meaning this chat room where it's fully interactive, 24/7, and dedicated for trading, right? So there's a lot of people that have worked really hard there. Shout out to Vin, shout out to everybody else that has worked on it. And this is great even for people that have 9-to-5 jobs. Like, even if you're not a full-time trader, the chat room is great because you can hop in at any point and ask your question about your trade, about feedback on your strategy. Maybe like Matt was saying, somebody wanted to buy calls on Netflix and then it tanked the next day. So sometimes we do need that filter, right? Filtering our trades through somebody who's been experimented, who knows what he's doing. Somebody who's been doing it for 40 years in Wall Street, chief market strategist at Miller Tabak, prior director at Merrill Lynch. I could go on. It's like 40 years in the game. So that definitely adds a lot of value. The experience of knowing how the market typically reacts, the interaction with bonds, yields, rates, the dollar, Bitcoin, oil, the Fed, everything else. All these things really are very hard for us to just put it in one ball and say, yeah, this is the outcome, because all of those independently impact the stock market and they all interact differently with each other. So being able to have Matt there and being able to digest all that information for you, for anybody, all the other members there, it's pretty good, because that way you can get your strategies right away. So even if you're not let's say, even if you're not trading full time, you can just hop in the chat room, ask your question, get your answer, and get going with the day. Or you can just follow the strategy that Matt has already laid out, right? NET up 16% in 2 days, right? So we're talking here about the stock. You would have bought calls, that'd be a different game. But you can see here, it pretty much goes really deep into the tickers. We're talking here about TQQQ there as well. We're talking, that's the tech ETF there. We're talking about McConnell here and Biden with the actual debt ceiling situation. I think a couple minutes ago, I don't know if it was earlier while we were doing the presentation, I think that the Democrats agreed to McConnell's proposition of the debt ceiling. So the conversation continues here in the chat room because that's what we were talking about. That's what we were preparing for. So we're not really, how do I put it? We don't get surprised by things in the market. We try to take advantage of them. We try to take advantage of the volatility that you see in the markets. Unfortunately, volatility will always be with us. So we might as well learn how to profit from it and not just sit on the sidelines, like Matt was saying. But you can ask any questions in this chat. You can ask about options. You can ask about buying a call, buying a put, if you want to do a straddle, or if there are specific stock that you want Matt Maley to do his analysis on. So if you noticed what we did here, what we were doing here for like 2-3 hours, we were going over your picks. We were going over things that you guys wanted to discuss, trades, all that stuff. And he does this every day in the chat, right? You have a chart there as well to follow with it. But this is something we do every day. It doesn't change if it's, even if it's on a Friday or Saturday or Sunday. There's a lot of traders that are there, keeping the conversation going. Just a question here from Adrian. How many current members? I don't know the exact members there, but we're not at a point where it's too crowded. We're at a very comfortable point right now where everybody gets their questions addressed. Obviously, having a chief market strategist like on a text basis is something that you don't get much out, but Matt is putting his heart and soul into that. He's working really hard on it every day. I see him. I look at the trades. I make those trades. It's definitely great because he knows his stuff. And I do trust somebody who's been doing it for 40 years. Who don't I trust? I don't trust the Reddit boards. I don't trust these social media people because there's really no fundamental tie to it. It's really just a meme crowd. I do like to stick with what works, the analysis that works, the process that works. Matt Maley definitely has been more right than wrong, in my opinion, as a trader. So that's why myself and a lot of other people follow him. GL, your question, can you do the chat room on a monthly basis? So the chat room is for a full year. It's not on a month-to-month basis. It's for the full year. So meaning that you make one payment and it's done for the whole year. You do keep the 70% off. So I saw a question there about the discount. So the 70% off is a lifetime discount. That means that next year, once the price goes back up to 5,000, the 6,000, the original price, you would keep the 70% off for forever. Basically, you'd keep that discount. And the laptop is complimentary. It doesn't change the price. This is just a gift that we are giving you guys for joining. Nothing to do with the price, really. It's just something that, it's just a courtesy that we're doing. Just because I did get some questions on that. But yeah, it's definitely interesting to see because honestly, you need to take trading as a career. You can't be taking trading as a hobby because people that don't take it seriously, they're not really that in tune with the markets or following somebody who is, they'll usually learn the hard way because the market, you kind of need to babysit some of the things you do, but taking it seriously as a career, that's probably the best choice you can make because it's the best choice you could make because when you're talking about money, to me, it stops being a hobby. So I don't, if I'm trading stocks and all that stuff, like, some people say it's a hobby. That's not a hobby to me. Like a hobby to me is going out for a walk or reading a book. But when you're talking about trading in the stock market, it's not a hobby. Like that's a career, that's a profession, that's a revenue generating skill. That's something you need to work on. Right? Because you can have your normal job and you can always trade on the side, but you need to know what you're doing or follow somebody who does, right? That would be Matt Maley here. So I definitely encourage you guys to take your trading career to the next level and start trading right next to a chief market strategist. Okay. The chief market strategist calls the shots at the fund. So that's kind of who you want to be trading with. Anne-Marie, that's a separate thing. You can just email me if you do have some time. This is, so Matt Maley does basic calls, basic puts, which is something that we do to take advantage of the volatility. FKN Compton, what is this chat service? Just joined the live stream. So basically, we just did like a 3-hour session around there with Matt Maley, the chief market strategist at Miller Tabak. You've probably seen him a lot in CNBC and Bloomberg. He's a regular host there, the regular guest there. They always ask him the questions. Whenever the market's tanking, really, that's who they bring in, right? Otherwise, they just bring in the people that say someone bought 10 million calls of AMC or something like that. But Matt is basically someone who's been in the markets for about 40 years. He's been at some of the biggest money managing funds out there. This is his career. This is what he's been doing all his life. So he definitely has a lot of experience under his belt. He's been through every single crash that I can think, except like the 1929 one. They're in the 80s, they're in the 90s, in the 2000s, and 2006, 08, all that stuff. So he definitely has experience with market corrections, crashes, whatever you want to call them. And that kind of helps me. It kind of helped me a lot because there was a lot of confusion when we were in March 2020 last year. You didn't know who to listen. And having that voice of reason is definitely good, especially if you're trading, because there's a lot of information out there by different places. And you do want to focus on the information that matters, like filter out all that stuff that you really don't need. Matt Maley, being at an equity firm, has access to all this stuff. You saw the Bloomberg terminal. It's like three grand a month by itself. So having access to everything as far as the research in the equity firm, Matt is basically sharing. He is sharing equity research, okay? Equity firm research. It's that high level research that you are getting as a retail trader. So imagine like you'd be a trader at Miller Tabak, right? So like you'd get the research and everything from them and work along those trades. So basically with Matt Maley, he's giving you all the research picks, and you can see everything. We went earlier in the presentation, what he's going over, what his analysis is made up, right? So there is fundamentals, there is technicals, there's a lot of different things that he's looking at because he is a complete trader investor. They're not moving pennies, they're moving millions of dollars. So this is, whatever you hear, like follow the smart money or follow the big money, that's like basically follow Matt Maley, like follow somebody who's been trading at the biggest equity firms out there for over 40 years, a career. So that's somebody that I definitely trust, because if I want to make this my career, I want to have like some sort of mentor, some sort of educator, somebody that can, I guess, hold my hand or whatever you call it. So that would be Matt Maley, the person I would trust with that, no doubt. And, really, really encouraging you guys to get the education so that you don't fall back into the emotional trading that almost everybody in retail does, like it or not. As retail traders, we do not have professional training on trading. We don't. And we do fall on our emotions a lot. And, that goes against us more than it goes for us. So having somebody, once again, who's been there, who's done it, who's on the game, really helps us find reason when, everywhere else in the market, you're just hearing buy, sell, all that stuff. Actually applying a strategy that works is all you need. Now, something that I really recommend to a lot of you guys, to not treat trading as a hobby. It can pay you more than your job ever will. So why not invest the time in it? Why not invest in your education? Your education translates into making money in trades. It's that simple. It's not like a college where you go pay and, maybe you get a job in 6 years, maybe. This is like live education, live trading, news feedback, digesting strategies, all that stuff. And keep in mind, the education process is a lifelong thing. It's not one day. The market from this year is not the market from last year. It will not be the same market from 5 years ahead of us, and things will change. Policy will change. A lot of things will change. So, it's important for us to be able to stay up to date with the market, the market rules per se, and they keep changing. The rules keep changing, and staying on the game is really not as easy as it sounds. So with somebody like Matt Maley, who does have that institutional experience, really is something that, in my opinion, is priceless. Having somebody at that level, with that level of research, that level of knowledge, that level of experience in the market, that's what I like. That's the people that I would typically follow and would like to learn from, just like a lot of you guys do here and watch him. But But yeah, we do have to make sure to make more informed financial decisions. That's what it comes down to. You're clicking that buy button, you're clicking that sell button. The level of education you have behind what you're doing is going to be different, because we have advanced traders here and we also have like new traders here. So it's very important that you start making more informed, more educated financial decisions. And that's something else that brings in value to the chat, having Matt Maley there as well. And that way you don't fall into the whole vacuum trading. I'm sorry, the vacuum trading. Vacuum trading is something I was doing a long time ago when I was trading full time, and it really wasn't good. I didn't really realize it until later on that, and a lot of people do this. They're just in a room, bunch of screens, and looking at a news thing or something, and you really are not you're not really discussing your trade ideas with anybody. You're not getting any sort of feedback. And Reddit boards do not count. Public pump and dump chat rooms do not count. This is a curated, exclusive chat room with chief market strategist from Miller Tabak, Matt Maley, which is a totally different thing. So back to the vacuum trading, I was just literally trading on my own, and I might go into this public chat room there and try to, but you don't even know if you're talking to a real person there at this point, right? So later on, I went figuring out all the mistakes I did when I was a new trader, when I was starting out with my account on Robinhood and all that stuff. The number one thing that I would say was not trading around the community. If I would have been trading with a community from the get-go, it would have been different. So hopefully this might be able to save some of you guys. I know somebody commented that they were down like 100, 200 grand. I really suggest that before you do go into the market with that kind of cash, try to find somebody like Matt Maley, somebody who really has experience under his belt. Because if you're a retail trader and you don't have any education in the market, you really have no business putting 300 grand in it, to be honest, at least until you've actually talked to somebody, like an advisor, or somebody like Matt Maley who's been doing it for a long time. And just want to go over a couple of questions here you guys asked. Now, the chat room is just for trading, but you obviously have to understand that there are certain policies that impact the stock market. It's just a fact of life. So can't be blind to it, because you don't want to lose money, right? So we always have to see what is the expected result. We have to analyze the situation from a trading perspective. Let's see, Leslie. Okay. I'm considering the yearly subscription, but tell me more about learning the methodology to apply to myself. Yeah, so I mean, once you're in the chat room, you talk directly with Matt Maley. I'm sure you have specific questions that are unique to you, just like everybody else has. And in the chat room, it is a very welcoming, it's a very good place for you to do that. I know that if you probably go to the public pump and dump chat rooms, people are just going to laugh at you and all that stuff, because they're probably kids doing that. But we're pretty serious about making money in the markets here. So everybody who is on board with the chat room is on board with making money. We really have a very nice community. I've been lucky enough to meet a lot of the members there, and there are a lot of very different levels of people, right? Some people are in their first year. Some people are in their second year, fifth year. You might be a private investor, like I can't mention names of any banks, but, there are a couple of private investors that I've signed up there. But, you have people from all around the world, retail traders, some people that are trying to learn a little bit about options, but just want to dip their toes in it, not go all in options, just use it strategically per se. So Leslie, to answer your question, you can definitely talk with Matt about anything in particular that you're struggling with. It's a very great environment to do that. Yeah, I mean, feel free to also email me and we could talk more. Stephanie, so to really optimize your time on the chat room, come with picks and get solid advice. So Matt is giving out picks. He's whipping out trades there, picks, possible trades as well, giving you all the research from the high quality trades that he scans out, right? So he's giving you the highest quality trades that he's aware of there. So you get all the picks there. As far as questions that you have, you can ask questions. The chat room is a two-way street, okay? You ask any question that you have, you get your feedback, your answer from Matt Maley, the chief market strategist. who's going to be on CNBC tomorrow, he said, and CNBC Asia. So, I mean, you having him on a chat room all day, all weekend is really good, especially right now when the market's going who knows where and the news is so crazy. So being able to have somebody that can digest that news for you and position you in the right way is good, because you can trade the volatility as well. You're not supposed to just sit there and wait, right? If you actually have the know-how to profit during volatile times. And I can tell you, retail is not known for buying the dip and selling the rip. So being able to trade right next to somebody who's a professional trader, chief market strategist, that is what's going to add you value, because then you're not going to be holding the bag and you're going to have a set strategy when you trade. We went over a couple of those here, but in the chat room is really where things get hot. I don't want to give it all out here because, there's a lot of people in the chat room there who go over this stuff every day, but that's pretty much regularly what we do. Okay, let's go to the questions on the YouTube chat. I'm a trader. Does Matt teach or just help with picks? I want to become an independent trader. So I'm a trader. Definitely, obviously, Matt can do all of them. He can help you with trades. He can help you with strategies. He can help you with, I guess, investor psychology things of it, like just, unique things to you, issues that you might think you can improve as a trader. And the goal of this is to help you become an independent trader. Right now, obviously, it's not going to be the same if you're trading right next to a chief market strategist as if you would not. It's a night and day kind of thing. Yeah, you're going to learn a lot from Matt, but there's really nothing that's going to beat having a chief market strategist there, like on call, basically at any point in the market. So yeah, if you feel you're ready after your first year, that's totally fine. A lot of people do decide to stay because, well, the value is Matt's opinion. The value is Matt's strategies, Matt's feedback, all that stuff. And, they want to make money the next year as well, not just the first year. And I can tell you a lot of people, I've gotten like 10 emails while I started this about people that are current members of his newsletters asking me about the chat room because they've had such a great experience with it. And we didn't even go over that. Like the Viacom put was one, Ford was up. I have him some here that I have. So top three in his newsletters, he got like a Viacom 2,500%, Wells Fargo 700%. These are calls and puts that we did. Seagate, STX 400%, Ford 370%, Riot 300%, Apple 250%, Sundial 250%. That's on his newsletter side. And, Microvision 423, Riot 244, IVZ 136%. So the winners are everywhere. Yeah, there are some losers here and there, but typically Matt is on the good side of the trade for the most part. And I know because I trade those picks. I've been a fan of Matt for quite a while here because of his strategy and his approach to the market, his educational approach. He helps every member out there. And it's really good to see that because I don't see that as a retail trader too often out there. So yeah, that might answer your question. Mamba, how much is the fee for being in the chat room? I'm going to drop the link here for you. This expires at midnight. I don't know if I said that before, but it does. It expires at midnight Eastern. Midnight Pacific time. So giving the California folks a time to, get the act together there. So let's go over some questions here. AD, I'm posting the link in the chat. I'm also posting my my information there if you want to talk later or tomorrow. Tomorrow would be better. Kenny, hello, Master. I have a simple question. Which site is worth trust for trade? I'm not sure if I'm understanding that, but you want to know what sites you can trust for trades. I'd say companies that are known for being good as far as like providing good news, being able to be fast with the news. I'd suggest either benzinga.com. It's one of my favorite ones. Or I'd suggest the chat room because the chat room is like, it's a private experience. It's a private chat room. We don't have trials on it. We don't have, and like, there's no free accounts there, none of that stuff. Like this is literally only paying members are there, which means that it is an exclusive VIP club for Matt Maley's followers. Stephanie, the newsletters are not included in the chat room, but you can call me and we can talk. I might be able to work something out for you, but this is only for the chat room, guys. Matt Maley has a wide variety of products here that people love and use. Typically, they just get them all. They pay it back in like a month or less. with the pick. So this is straight up feedback. So Kylo, no money back guarantee. Yes, there is, sir. There's a 14-day money back guarantee on this. So if you guys, if you think that there's something that didn't address your reason for joining the chat, obviously I'd like to know what it is, because maybe we can improve it. We're very big on feedback. But if you don't like it, no problem. You get your money back 100%, not half of it, all of it. You get all of it back if you do request a refund within the 14-day money back guarantee. So that's for you, Kylo, to answer your question. Mr. Compton, he focuses on long-term investing or day trade, swing trades. So he does both. He does both. He's been in Wall Street for 40 years, man. What hasn't he done? Yeah, Kylo, it's definitely legit when there's a guarantee. No doubt. Yeah, there is. Everybody here that joins today will get a 14-day money back guarantee. Okay. That's the Benzinga promise. That's how we do it. We're that confident that we do it that way. No reason to do it, but goes to show really that we're very proud of what we've done here. We're very proud of Matt's accomplishments in the chat room. The picks have been amazing, to say the least. So Mr. Compton, he does. So as far as like day trading, flipping here, buying there, doing like all that thing during the day, that's not what we're doing. We're definitely looking at, I guess, here's the thing. In the chat room, remember, we're finding good trades for swings or for a couple of days or a week or so. You see, the situation in the market can change in 1 second. So you had a good trade last week, news comes out, the whole market starts, there's a rotation going on due to that news coming out. Then that's how you pretty much stay aware. Like if the trade's working for a whole year on a row, going up every day, are you going to want to day trade it, or do you want to just hold it and let it go up? Obviously, stocks don't work that way. News and a stock being oversold or overbought, that kind of stuff is always going to impact the price of a stock. So we're looking for trades that we can successfully get in and get out with minimal risk and max profits. It could be a week, it could be 4 days, it could be 2 weeks, it could be longer than that. Now, when you're talking about calls and puts, we're talking about very quick trades. That is very quick. That is not something that you're planning on holding for like months and months. We're really only using options for volatility. So like I have a firm, I've owned that stock for like a month now. And, it's a very good stock. I like it. And I've been trading weekly calls on it, monthly calls on it, buying puts when it rips. I mean, today was a great day. It went up like 20 something percent. So like, I'm always watching a firm. It's like my favorite stock, but like being able to use options to capture that extra green, that extra momentum, that's really what we're doing. Right. And we do it on stocks that we own and that we don't own as well. It just, we're trading the volatility. So all in all, it's Matt Maley's service. He's the guy that with the experience, he's the guy with the background. He's done it all in Wall Street. I can't tell you that I know a lot of chief market strategists, especially, for somebody that's on CNBC every week and Bloomberg every week or two, Yahoo Finance, like, it's something that I like to see. It kind of gives me that good feeling and sense that, this person is well known on Wall Street. So I guess for a retail trader to be join the chat room here, this is heaven for you, man. Definitely my suggestion. If you're trading on the Reddit boards, if you're trading on stock tweets, if you're doing all that stuff, man, my suggestion to you, unless you want to blow up your account, cut it out and join a community of traders that actually follow somebody that knows what they're doing, right? Somebody that has a strategy, that has a set process that works. On top of that, all of the research from the equity firm from Miller Tabak, where he's the chief market strategist, that's who you're trading with. Okay. You're trading right next to a chief market strategist. I don't know how much better this can get for anybody, for retail specifically, following all these people on YouTube and Twitter. Like I've heard so many horror stories, and I'm not going to repeat them, but yeah, that causes a lot of people to lose everything. And, that's really not what we want. We don't want you guys to go through that. And that's why we're doing this outreach, because we want you guys to do educated trades, educated financial decisions with Matt Maley. So that's really what it's all about. We want to help retail traders make better financial decisions. It's that simple. So Dupree, questions answered on the live. Yep. No, there it's every day, man. Yeah, it's every day. Obviously, if you put a message like at 9 p.m. or 8 p.m., obviously, you kind of have to wait to the next day. Markets close at that time anyways, but yeah, everybody gets an answer. Everybody's like, there's already a strategy. I showed you like a couple of days, like not even a couple of days, literally is one day. All this scrolling I've been doing, it's literally been just one day. So we already have like a thing going on now, like of strategies that we're looking at, of picks that we're looking at. So it's not like random tickers every day. Like there's always a story. Um, Mr. Compton, well, probably like once a month, but the price does go higher. So right now it's 70%. The next one we do is probably going to be 60% off. So it's up to you if you want to wait. Obviously, I would say joining today would be the best call because you'd get the best discount. Otherwise, I'm not going to be able to help you afterwards once the price increases. All right. Ola Feggy, we got a couple questions here about the chat. That's pretty good. I'm glad you guys are very interactive. Davis Lowe, send link for sign up. Okay, Dave, I got you. Let me just post it here in the chat for the Zoom. And let me know if you get it. If you guys want to chat, do the everyone, not the Q&A. So we can all see it. There's a lot of questions you guys are putting that you're just sending to me and everybody else can't see them. But there's some really good questions. So yeah, the discount, I'm just going to go over them. The discount is for the rest of your life. So whenever it renews, you keep that 70% off, regardless if the price increases like it will in a week or two. Do you trade stocks and options? Yes, we do trade stocks and options. We use options for volatility, primarily stock. Okay, is Matt Maley available in the chat room all day? Yes, Matt Maley is available in the chat room all day. That's pretty much where we're all there. Kylo, yeah, we do hand holding, all that stuff. I mean, it's not very hard what we're doing. It's just literally just buying a call or a put, or it's really that it, it's not that we're not doing anything crazy, anything complicated out there. Like Matt said, I'm an options trader. I can tell you for sure, like what we're doing there in the chat room with Matt is straight up simple, the most simple option trade you can make. Buy a call, buy a put. All the details depend on the trade, but that's obviously inside the chat room. That's where all that fun happens. That's where all the good stuff is going on. And I do like it. It's very down to the point, right? Like, I just want to talk to Matt. That's it. That's all I care about. So yeah, you're welcome, Kylo. No worries, man. Okay, guys, is the newsletter paid service? Yeah, the newsletter is a totally separate service. It's not the chat room. In the chat room, you're going to get several picks a day. So now you have the freedom to trade it however you want it, but I definitely would stick to Matt's strategy. I would do what the chief market strategist does. I would not try to wing it. I would not try to do something that he didn't say. I would literally just do what Matt says, and that's it. That's literally what I've been doing with it, with not just with the newsletters, but with the chat room. And it's green. I can tell you that the trades are green, my friend. And you've seen it here. And everybody here that's a member definitely knows it. Mamba, do you have a monthly payment plan? We don't have a payment plan. This is a 1-year subscription. But feel free to reach out so that we can see the specific situation. I mean, maybe I can work something out. Maybe we can split it in 2 months or something. Now I'm doing that as a courtesy. We don't do any payment plans or anything like that. Because basically it's just, we'd have to manually do all that stuff. But if you do have a specific, situation, feel free to reach out. I mean, I do understand that, I understand life, so if there's a situation that you need to talk to me about, we can talk. Yeah, just call me. We'll work it out. I mean, it's okay. Like, I understand, like, it's a noble cause. You want to get education. You want to start making better trades. I totally get it, so I'm willing to work with you on that one, just on this one, but it's not something we typically do. Yeah, 2 months, man, by that point, you'll pay 5 subscriptions by that point. Okay, guys. So there's a couple questions here. I think I got to everybody. Does anybody have any other questions about the chat room with Matt or what we went over today? the entire 3-hour presentation that we just delivered to you guys. Does anybody have any final questions, either about Mark's strategy or Mark's chat or his picks? Anything related to Matt Maley, let me know. We'll be cutting the stream short here in a bit, just because I do have to get back to some people here that have been calling me nonstop to join this. So don't want to leave them waiting for too long, guys. So just let me know if anything comes up here. Yep, Alexander, thanks for the email. I'll definitely be talking with you tomorrow. Thanks for signing up here. Welcome to the family, my friend. Welcome to the family for sure. Okay. Yeah. Okay. Yeah, Brandon, hit me up, man. I'll take care of this. So, well, my laptop's about to die. So just like Matt, now I need to put a charger here. Hold up. Okay, Brandon. Stephanie, see you in the chat room too. I'm definitely there. I'm always looking. I always have a window open, even though I'm busy working and all that stuff. I always have Matt Maley's chat room open. Like, there are some things that are sacred to me that I just cannot make a move until I hear a certain person react to the markets. That's Matt Maley. That's been Matt Maley for me for over a year, and I'm really glad I made that call. I'm very sure that you will as well. As you can see, he's very passionate about educating. He's very passionate about helping retail traders. He's very happy about helping other traders improve their strategies, understand Wall Street, understand the market, all that stuff. You know, there's a lot of misinformation out there, especially with TikTok and YouTube and Twitter and all this stuff. So you kind of have to block all that noise, all that nonsense, and just, you know, do it the right way. Like, if you're literally trying to, you know, become something in your life, you know, a mentor would definitely help. Somebody who's a recognized mentor, right? Not just a whatever guy, like a chief market strategist who's on CNBC and Bloomberg every 2 weeks or week. That's what I like. Jerry Lou, you don't need a laptop. We can just talk. You can just call me and we can discuss. All questions about laptops, just call me. But yeah, the laptop is a complimentary gift. It is a gift. We're something we're doing, not just trying to be nice here with you guys, trying to give you guys tools and things like that. That's it. So yeah, Stephanie, I'll see you in the chat room. Mamba, do you help with trade setup reviews? Yeah, that's what we do all day, man. That's literally what we've been doing here. You got picks here from Matt. Like, well, I mean, the FDX pick, he's obviously going to be following up with the chat members, because now he has to put it in his ecosystem of trades that he's ready to do. So FDX, there's definitely going to be a trade on FDX, but I mean, not today, obviously. We just, you know, and that's what we do in the chat. Some people bring on their questions, some people bring on their tickers. And I can guarantee you that a retail trader who just started is not going to have the same eye when looking at things like Matt Maley. It's like the untrained eye, you know, you don't know what you're looking at. You might think you do, but there's a lot more to a trade besides what you're seeing on the chart. There's a lot of things that happen behind the scenes that you might not be aware how they work. Like, we touched on a few today, like, you know, bonds, yields, interest rates, Bitcoin, oil, the dollar, Federal Reserve, tapering. Like, all of these things impact the stock market. You can't be blind to it. If you're blind to it, then, you know, you're a blind bull. That's not good. Never good. So being an informed bull, I like smart bulls, you know, I like bulls that are smart and really do their homework and realize that, hey, sometimes we'll have corrections. No need to sit on the sidelines. We profit from those corrections. We trade those corrections on the upside and on the downside. So that's what experience will get you. That's what trading 40 years at the highest level equity firms will get you. You don't get this trading experience on Reddit. You just don't. Those are two different worlds, 100%. So I really encourage you guys to definitely to reach out and, you know, see if the chat room is something that might benefit you, right? Mr. Compton, yeah, man, email me. No worries, man. If I don't get back to anybody today by the end of the night, don't worry. We will talk tomorrow and I'll call you tomorrow. We'll take care of it. Don't worry, guys. So let's see. We have a question here from Jerry Lou. Do you have to spend a lot of time in the chat room to get the most out of this service? Not really. I mean, it depends. It depends what you're trying to do. If you're trying to actively trade, if you're trying to, you know, just get a quick trade and have a setup and have a plan, You don't have to be all day in the chat room, really. You put in a question and it gets answered right away. Like obviously any question that you have, any trade you have, your question is going to be different from the other guys, but this is a two-way street. The chat room is a two-way street. You ask your questions, you get value out of it. You get your question answered, or your ticker. You get a full review analysis from Matt Maley, the chief market strategist, with a possible trade setup. Just like FDX came up now, we got that trade from one of you guys, and now it will be a trade for the members, for the chat members, and that's something that we do all the time. Mr. Compton, yeah, my name's Rodrigo, so just email me, no worries. That's my information there. You can email me. We can talk a little more. Okay, let's see. Do you hold crypto and stocks in your portfolio? No, I don't hold crypto. I do hold stocks, a firm. That's what I like. But I definitely focus more on what Matt Maley's doing. Last presentation here, I brought a firm up to Matt Maley and we were talking about it for a bit. We did a full analysis, a full research, brought the fundamental thesis to the life here. And it was like $105, $107 when we talked about it. And I've been trading calls in and out. Obviously, I'm not posting my trades in the chat room because, I'm really busy working here. So I don't have time to be doing all that stuff. But everything that I've learned as far as trading options to gain that extra momentum, to get that extra green in my pocket, it really is options. And it's momentum trading with calls and puts on the upside or the downside. And that's what I've learned from Matt. This is something he's been doing for like over a year now, using options for momentum, also for hedging your portfolio or your trade. So there's more to it than just, there's a lot. There's a strategy. There's a set strategy that we follow in the chat room that Matt lays out. So everybody's on the same page. No trader gets left behind. We all trade as a community, which is a community of educated retail traders. And that's really what we're doing here, trying to help you guys out. So if you guys don't have any more questions here, I know I've gone pretty hard on the questions and answers, which is good. This is why we do have the Q&A, so that you get everything answered. And then you guys go back to the chat room and talk to Matt directly. He's going to be there early morning going over this stuff, which is good because you do want somebody who's on point and ready, ready for the market, ready to take on whatever happens. So if there's no further questions here, I'm going to be closing shop here for the night. I do have some calls to make. I won't leave you guys hanging because that's not what I do. So I'm going to call back all you guys that gave me a ring. If you do have any questions, we can go over it today. I'll be working here for a couple more hours. It's what I like to do. I do enjoy all this stuff going on as a trader. And I do enjoy being able to give you guys this chat room with Matt Maley because it helped me a lot. And I know it will help you too. We just have to be disciplined and stop doing the YOLO plays and all that stuff, like, the Wall Street bet trades, that kind of stuff. We just have to be careful. We need to have discipline. We need to be consistent with the strategy, with everything that we're doing in the chat room. So I appreciate you guys. Definitely wish you guys the best. We're going to see you here the next time. Thank you, everybody, for joining Matt Maley, for joining me and Harvey and everybody here in the team on the newsletter side of Benzinga. We definitely appreciate you guys being here. And feel free to reach out if you have any other questions. My information's all over the place here. So any questions, feel free to reach out. I'll be more than happy to help, guys. So thanks for joining, and we'll catch you next time. Thanks, guys.